Folks, this live stream is brought to you by my sponsor AAA FX. Now, they're a fully regulated broker in Europe and South Africa, offering Forex indices, commodities, crypto, and over 100 stocks. Now, at AAA FX, you pay no commission on any Forex pair using their ECN Plus account and low commissions on cryptos and stocks. Plus, you can deposit with cash or crypto, get a free VPS with deposits over 5K, and easily integrate the well-known copy trade service Zulu Trade. While you're waiting for the stream to start, go and check them out by clicking the link in the description, comments, or visit AAAFX.com.
What is going on, guys? Good morning, good afternoon, good evening, wherever you are in the world. Hopefully you guys are doing wonderful. I am doing awesome. It is 10 a.m. on Saturday, January 21st, coming at you with a ton of pairs. We have a lot of setups to go over today, guys. So hopefully you guys are ready to go, just like me. Get your coffee, get your tea, get your juice, whatever gets you going, and let's get started. I'm pumped up today. We had another great week in trading. I'm going to be showing you guys a track record, of course. It has been updated on market closure yesterday. And I do have a couple of updates that I want to go over with you guys as well before we get started here. So, of course, drop your location, drop any pairs you guys are looking at, maybe any trades you guys took last week. Would love to see what you guys have been up to. Can't wait to get started today. All right, we got India in the house. Good to have you guys on. Drop your location, of course. How was Aussie dollar? Yeah, I'll talk about Aussie dollar today. It's going to be actually my second pair I go over. We're pretty much going to go over, I would say, about 20 pairs, but I'm going to make it relatively brief. I'm not going to talk about them in too much depth because we do have a lot to go over, but definitely going to give you guys the nuggets there and obviously the setup that goes with it. Portugal, India, Washington. Nice. Good to have you on, Austin. Paulo, good to have you on. Norman, Virginia. Amazing. CAD, GJ, UJ. South Africa. Big fan of yours. Appreciate you guys. Appreciate the love. I love doing these for free for all of you guys. I love speaking with you and just talking trading with you all today. We'll get started here in about a couple minutes. Just want to wait for people to trickle on in here, and then we have a ton of stuff to go over, guys. So do take notes or have your chart open next to you because we have a lot of great setups to discuss today and some really nice updates for the Ariel Fx community. Jamaica, UK, Tanzania, Zimbabwe. What's going on? Morocco, Pakistan, Puerto Rico, Kenya. You guys have come eager to learn today. I love it. I am ready to go with my coffee, of course. Just out of curiosity, guys, what should I put behind me? I have a couple of options here. I have a couple of pieces of art. What would be kind of cool? You know what I was thinking? I was thinking about putting, you ever seen those neon signs that light up? Maybe if you go to a restaurant somewhere, you see them at bars, maybe that light up. Maybe I could put one that says Ariel Fx behind me. That would be pretty cool. I've been contemplating because I just moved into my new place here and I'm trying to figure out what I can do in terms of decorations. Anyways, Josh, good to have you on here today. Mohammed, amazing, amazing. All righty, just a few updates and then we'll go ahead and get started here. So we actually do have a date for our, probably I would say maybe our final course. We'll see. Just depends on if I can get all the value there in that course. I'm so excited about this new course because it's going to be sort of a compilation of all of our other courses put together. So this final course that we're going to be creating for the VIP community, this is pure application based. So it's not really going to go over the concepts or the components. That's really all in the other courses. and teaches you how to tie everything together. But at the same time, this new course that we're coming out with is pretty much going to teach you exactly how you can look at a blank chart and go through all of the steps in sort of a systematic, I wouldn't say step by step, because obviously everything's going to be different, but looking at it from a more streamlined perspective, all the way to a potential setup. So it's going to really help you guys in terms of guiding your trading. So I'm really excited about that. And that will be released. Let's see if I can pull up my calendar here. Give me 1 second, guys. That will be released on Tuesday, February 14th. And we already know that is Valentine's Day. So we have a few weeks to go. We didn't want to rush it because we want to provide as most value as possible. So we are going to be releasing that here in a couple of weeks. So very excited. And of course, those of you who are currently a part of my VIP mentorship program, that's all going to be provided for you absolutely for free. Anyone who is not and wanting to take a part of that, we're sending all of our trade ideas and analysis to the group. You get full access into 10 to 20 hours of content that teaches you exactly how we trade. So you don't have to be confused by any of my markups here on the live sessions anymore. You guys can understand perfectly exactly what to be looking for and taking these trades alongside us. All righty. So that release date is for the 14th. What I'm going to quickly do before we get started on the charts here is I'm going to present my screen, and we're going to discuss the track record again, because it's very important that we all have a really clear understanding of transparency in this industry. Because quite frankly, just being honest, I just don't see much transparency in the Forex industry these days. So I just wanted to be different in that regard. Wanted to provide you guys with peace of mind, knowing that you guys have hopped on board with credible people. So this is all updated pretty much 2 times a day. Just updated it last night upon the market closure. So guys, we have the live streams here. Obviously, we don't talk about so many pairs because we're only on for about an hour to an hour and a half every week, well, twice a week. But I can't get all the pairs and all the trades that we discuss throughout the week here because we are only on Wednesdays and Saturdays. However, we're currently up about 6.2% from all of the pairs that we have currently traded. Let's see, we had 1 loss, floating 1, 2, 3 trades, and then closed 2 trades. And then both of them were at break even after taking partials. So trying to get this down to at least like 0.1% precision here. So obviously I'm not just willy-nilly calculating the floating R's. These are, calculated very meticulously. And obviously with the VIP community, we didn't have as good of a week as we did last week, but we still made money this week. In total, we're up 17.8% in a matter of 2 weeks. This is our 2nd week, coming into our 3rd week for the month of January, because we started on the 9th of January. I wanted to give the market about a week to settle in before getting back into trading. So you guys have that full update here, updated to the pretty much to the second. So every time I post something, you guys can see it. And obviously, we have that running track record here, so you guys can keep up with it. I'm going to be doing this all year long. I'm not going to hide anything. I have nothing to hide. We're going to be doing this for February, March, April, all the way down to the end of the year, and then probably starting back over again in 2024. I'll probably also put together some sort of overall track record at the end of 2023 to give you guys sort of a highlight as to how our trades have been faring over the course of the entire year. So wanting to just to provide some transparency there. Now, before I get started here, I'm going to answer a couple of questions. Anything you guys have, we'll be happy to talk about before we get started. Of course, I can't see the live chat as I am going through my pairs. So I'm going to stop about halfway through and we'll take some questions and everything like that. And then we'll finish up. Anything you guys have now? Peter, Francis, Nabil, good to have you guys on today. Amara, amazing. All right, let's go ahead and get started. I'm sure people will, start trickling in as we go, but glad you guys are on time. Let's do it. All right, of course, please let me know if you can hear and see me. I don't want any problems with audio or video as we go. Let's see. I just wanted to say thank you for what you have done. Your help with the AUD USD last week helped me get a nice win yesterday. So my concepts becoming more clear. Thanks to you. Awesome. Diego, that's great to hear. That's just what it comes down to, guys. It comes down to practice. There is really no secret sauce or golden strategy of any kind. It comes down to just learning the concepts that you resonate with and putting in the time and practice in order to make it work. So guys, please drop a yes in the chat if you can hear me and see me fine, and I'll get started. All right, there we go. Sorry, it was lagging a little bit. Good sound and screen. Awesome, perfect. Okay, cool. So head into the charts right now. I think that was the track record. Okay, I'll find my page here. My goodness. Oh, it's right here. Beautiful. Okay. So of course, guys, if we lose you in terms of audio or video, please just send me a Telegram message. It's at Ariel Fx Trading, just so I can fix the issue and I'm not talking to a wall. So anyways, let's get into it. We have, I think, 18 or so pairs I want to discuss. Unfortunately, guys, you guys know the deal. For those of you who have been on for quite some time, the pairs that are not highlighted in red here, I'm just not going to talk about. I wouldn't want to waste your time talking about something that I just don't clearly understand at this current time. So for something like Euro AUD, Euro NZD CAD CHF, all those pairs, it's just not worth talking about because there's not a lot of value that I could give you. The direction really isn't clear yet. Not to say that it can't be clear later on next week. At this current time and in this current price action state, I just don't really see much to talk about. But everything else, we have a lot of setups for, so let's get right into it. So US dollar. So this is not the DXY, but it's very close. So obviously, the US dollar has been trickling down for quite some time, right? Which is kind of odd because, as rising inflation and interest rates continue to hike, normally that would increase the value of that domestic currency. So for instance, US dollar, we are in the US, interest rates in the US are skyrocketing right now. Normally that would push the US dollar long. However, I think that's the reason why we've been pricing that in for so long. We've been in an uptrend for, a long time, since the beginning of last year, essentially. So this entire bullish run, even though interest rates at the time were not bad, they weren't, increasing. I believe that this was all due to, pricing this into the market. And then come 2023, we're starting to see that decline that most likely hints that, okay, we priced in the interest rate hikes. Now we're probably going to move towards pricing in the recession that's about to come. We're already in a recession, essentially. The mainstream public doesn't really know that. We've had negative GDP for, I think 2 or 3 quarters now. I could be wrong on those stats, so correct me if I'm wrong, but I do think we can see a significant decline. Now, I'm not sure if, we're going to get pullbacks. Obviously, the market will come with its pullbacks. Obviously, we have these lower time frame swings. Then, of course, we'll have some sort of overall pullback or maybe even a deeper one before continuing. But I think the overall theme with the dollar is long-term bearish for the time being. This is, like I said before last week, this is all low resistance liquidity, meaning there's not a lot of firm retracements in the market like we would like to see, firm wave play. This is really just in a trickle-like state. So when we are shifting trend and moving to the downside, there's really nothing to stop price in terms of areas of interest to be taking long. There's no bulk orders in the market that would reverse this particular asset class. So continuing short here, that's what we're looking for. Now I'm going to scale into a lower time frame. We're just going to keep following the trend until it breaks, guys. And as I go through these pairs, make sure you're marking down these levels so you have them. You can follow along throughout the week. Obviously, unfortunately, we only do these live sessions twice a week, so we can't really give you updates throughout the week. That's really what our VIP program is for, giving you updates down to the minute of exactly what we're looking for and any, change in direction that we could be seeing. What's also very interesting, and I'm not sure if I have mentioned this before, but those of you who are a part of our VIP program, or even just on these live streams completely for free, just sitting back and enjoying the value here, all these levels I'm talking about, even if you were to take every single solitary level that I point out, obviously we don't trade the dollar, but we trade obviously all the other corresponding pairs. If you took every single piece of analysis or trade idea and placed them on good risk management consistently, it doesn't matter how many wins or losses that we would incur. Overall, the net high risk to reward trades would completely outweigh any losses and you would be in net profit. So as we go here, just keep in mind that it is okay as long as you have followed your analysis, you trust yourself, and you trust the analysis that you have created. and you're going based upon just the general concepts that we teach. And it doesn't need to be difficult. It really can be very simplified. Many people think that the more complicated something is, the better it is. And that's really the exact opposite. People who are able to take complex concepts and simplify it down, their understanding is really highly there. So, my whole point is as we're going through this, just note the simplicity of the analysis that I'm giving out and just the general areas of interest I'm talking about. Obviously, when it comes down to it, there is more in-depth stuff that we could be talking about, but for the sake of time, I just don't have the time to do that. That comes down to really looking at lower timeframes and confirming trades based upon higher time frame perspective and having that holistic understanding. So it is not terrible to take every single area of interest that meets your rules that you have confluence for, because at the end of the day, sure, you are going to lose trades. It's a part of the market. We are not able to win 100% of our trades. It's just not possible. But taking the trades and being confident in them every single time your rules are met, over time, in the long run, you are going to be net profitable. So for instance, really quickly before we get started here, and I know I'm dragging this out, but last week we finished with 3 little losses, but that's okay. We cut our losses, but look at this trade right here. Very simple trade that we took. It was a hedge position on CAD chef, 3.8%, minus what? 1.25%. So that's what, 2.55% or something like that we netted. So you don't have to win every single trade, right? But the trades that you do win usually should have a certain set risk to reward with them, at least a minimum of a 1 to 3 or 1 to 5, whatever you guys want. But do continue to take all the trades that make sense to you, because in the long run, you will be profitable. It's just how it works, in my opinion, at least. So anyways, US dollar, we are continuing to push lower on the higher time frames in terms of, these swings, but also on the lower time frames in terms of these swing points. So we want to just continue to trade with the trend until it breaks. Obviously, we don't trade the dollar. I'm not sure if you guys do, but I personally don't. I just use it as sort of confirmation for the other dollar-based pairs that we do look at. So obviously, we were looking at this last week. We talked about it, how we wanted an overall pullback. And I said that we may not even get the pullback, right? We could easily continue, as we could just continue this week, just with the lower time frame trend. Then we could close on Friday right there or something like that. We don't know if we're going to get the pullback, but if we do, then that's an area of interest that will most likely play out for us, right? Because we've swept descending liquidity, pushing back up into a level of supply. And I know this is blurry. I'm just zoomed out here. And then we continue with the overall trend. So, when it comes down to it, don't get so confused over every single tiny little swing point. Understand where we're headed. So obviously, we're making lower lows, overall lower high, pullback, overall lower low. So most likely we're not going to come back above this high. And if we do, then we're going to be in some sort of higher time frame retracement, because we are still higher time frame bearish. So if we get that level, if we get a run up, that could be a level in which we push into. However, this doesn't mean that, let's just say you're trading the US dollar here. That does not mean that right when you get a push to the upside, you should be looking to then just buy it, because we don't just buy or sell into levels unless, again, our confluences and our rules are met, because we have to treat each trade independently from one another. So what also do we see here, right? We have 1, 2, 3, 4 touches of this retail trend line. So obviously there is going to be some sort of liquidity resting above this level. So just because we may see a push like that, could we easily see a quick push back to the downside? Absolutely, that's a possibility. So we have to just be conscious of that and understand that we probably shouldn't be trading counter trend. Either we wait for continued setups, either, here where, let's just zoom in here, where we had equal highs, we ran the liquidity, we made a lower low, we pulled back into supply. We can see we ran more liquidity here with this push, buy to sell. If we make a lower low here, could be an opportunity to continue looking for shorts. Vice versa, we could be looking to not necessarily long, but wait for the market to push higher, sweep the descending liquidity, and then look for a break back below into the range, then look to pull back and short again. Or, we look for the overall pullback and wait and look to sell up here. Obviously, using that in correlation with all the other US dollar-based pairs. So what am I trying to get at? Dollar is bearish. We need to continue to look for overall shorts. Okay. So with that being said, AUD USD is a little bit tricky because, we have created, obviously we're creating higher highs and higher lows, right? And then we have broken this counter trend structure. So what does this mean? Now, this is what I would highly recommend. I would not recommend simply just taking this off of a pullback, waiting for shorts. Now, you could do that, and yeah, sure, you could get lucky sometimes, and it could actually play out, and we have an overall pullback, right? That is definitely a possibility. However, what's more probable is if you wait for, I would say some sort of accumulation or just some sort of break of structure counter trend this way, and then wait for the pullback to short off. Wait for that failure to generate a higher high, and then wait for another lower low, and you can pull back for that third drive into the low, then sell it into a higher time frame objective. Obviously, if this low doesn't come into this low to begin with, right? Because we already are looking to buy from this level, right? We are higher time frame bearish. So that's definitely an opportunity that we can take advantage of. If we just look at the basic structure, we have a high, we have a low, a high, a low. This is our overall high. Yes, this is an intermediate high, intermediate low, and we can see these intermediate swing points. Yes, we have broken counter trend structure this way. We do have relatively equal lows, so that is a possibility that we do roll over for sure, which would actually be preferred because for one, that would give us that overall pullback into our higher time frame levels at 6.8 and 6.790. But also, what is this? This could be a potential retail head and shoulders pattern, right? So that would be that fake out to the downside. We would get triggered into our longs. It would entice buyers below the neckline here because that's what they're taught to do, to sell below the neckline of the retail head and shoulders pattern. And then price would make a move back to the upside, which that's what we would prefer because then that would generate liquidity for the institutions to run so that they can place their orders here at discounted prices where we are looking to enter into, and then targeting the retail stops above the right shoulder or above the head, right? Which would give us that overall higher high, higher low, higher high push. It is important to note the higher time frames, though, of course. Where did we come into higher time frame? Well, we have come into our last point of supply here on our most recent swing points. We have a low, we have a high, low, high, low. We're seeing that overall pullback now. So is there a possibility that we just roll over to the downside? Yes, there is. However, we have to just kind of use a little common sense here. So yes, technically the structure is still bearish. However, if we go back out to the weekly time frame, we have actually come into a weekly demand. And we talked about this last week. So honestly, I say higher time frame always trumps lower time frame. So I would not be surprised whatsoever whether or not we just go long now or we have a slight retracement and go long. Overall bias is still long. The dollar or the DXY or whatever you want to call it is extremely bearish. And there's no signs of strength whatsoever, until otherwise, proven. So I'm going to continue to look for longs. Now, what I want you guys to do, and obviously this is all just advice. I'm not here to tell you what to do, obviously, but don't get so caught up in the potential reversals. This is where it kills traders in terms of their overall profitability because the market presents reversals so easily. It's so easy to spot a potential reversal than it is a continuation. Now, that's just through my 5 years of experience trading. I've just seen so many pretty looking, reversal setups that don't end up playing out, that sort of entice traders to come in and take a position. So just because we may have had a break of structure here, quote unquote break of structure, right? That doesn't mean that we're actually going to pull back and then short off. There's a possibility we do have a higher time frame level that we could push into. However, this could easily just be a liquidity run for just a continuation to the upside. So don't get too caught up in the reversals. Understanding just have common sense and just say, okay, where are we, higher time frame going? Where are we headed? We're overall bullish, right? So if we're overall bullish, do we really want to be looking to take short trades? I mean, that's really what it comes down to. I mean, you could ask, a 5-year-old, hey, are we going up or are we going down? And they wouldn't tell you we're going up, right? So we should most likely, unless, otherwise, we should be looking to buy. So like I said before, if we come into this level, have the rejection of this prior inner supply, and I said inner because there's no supply, like there's no push up right here in the fall. This is more of like an inner supply. So I'll talk about that in the course, like outwards versus inner supply and demand levels. But that's a possibility. So let's just say, we go like this or something like that, and we get that clear break. So we fail to generate the higher high, make a lower low, then we can look to take that short into here, and then we can look to buy it. All right, so I will not be looking to take this short here upon market open. Because we could easily just continue long. I need to see more confirmation. But in terms of a setup now, you guys have our higher time frame zones. They are they have been put in the track record for your benefit. CHF JPY. Okay. So with Swiss franc Japanese yen, we need to look at the higher time frame in order to identify current direction. So yes, we have been bearish within this overall pullback since September of last year. So for a good, 4 or 5 months or so, something like that, right? Let's look at the higher time frame structure. Okay. Where are the swing points? So obviously we have this low that generated this high. This low that really generated, this isn't really much of a pullback, but it is selling volume. We're going to call this the swing point. This is just the range, right? So this is our pullback in here. This is our new higher high. So this is the range of this new leg. So technically this is just one overall pullback, and then we could possibly see an expansion, right? Higher high, long pullback, higher high again. That's what we're looking for, because why? We're in an overall uptrend, right? There's nothing that's stopping price. And if we are to roll over to the downside, don't you would think that we may need to run some sort of, descending liquidity in order to be able to, for the institutions to be able to place all of their orders at a particular level, meaning we have 1, 2, 3 touches of this trend line here. Retail is most likely taking advantage of this particular high here, right? They're looking to sell. So that's 3 touches of the trend line. Same thing with here. We have descending liquidity. So I would not be surprised if price maybe pushed up into it, had a reaction, and then we went long, right? Sweeping all that liquidity. So I am looking for overall longs here. Nothing really strikes my eye at the current time. However, remember, high, low, high. If we get below this level, then I think, yes, we can be looking to short this market, because at that point we would be bearish. But until we break this previous swing point, price is still pushing higher, and we just have to trust the market structure. So where did we come into here? Now I'm going to scale into the 1 hour time frame. And if we just go all the way into it, and I'm just going to zoom out really quick. We had a low, we failed to make a higher high, another lower low again. That pushed down into our prior higher time frame level of demand, that previous swing point. And then we made another move. So just because, guys, just because we fail to make a higher high and make a lower low doesn't make us bearish. This just means that we could be in on a lower time frame trend, which would be that higher time frame retracement for a continuation. Right. So always trust the market structure in the higher time frame. So we swept sell side liquidity coming into that demand. And then at our last point of return here, right, we had a lower time frame accumulation. So I'm going to go into bar replay really quick and show you on the 5-minute time frame where that accumulation is. So when we get back down into these levels, we can be looking for, I'm just going to pull up the VFI indicator here. Look at the divergence that we're seeing. Right, as price continues to push down here, volume is significantly bullish, meaning institutions and banks are most likely offloading their orders to other traders to get into their long positions, because they have to have someone to essentially buy from, right? Because if they're buying, they need a seller on the opposite side of the market to essentially sell them the position. So that's why price continues to fall. But volume, buy-side volume is starting to come into the market there. So where could we be looking to mitigate this institutional, accumulation? Well, there's 2 levels, right? We have this overall level of demand, or excuse me, supply. Well, it was supply, now it's demand because we broke out, right? We've been maintaining bearish structure, low, high, low, high, low, high, and then we made the higher high. So that will flip from supply to demand. We also have a lower time frame level right in here. This is our last selling volume right there that failed to generate any sort of lower low before the expansion rose. So we have 2 levels of demand. So let's just look at the most recent one, or the first one here. So we're going to put my cursor right there, and then we're going to zoom out of bar replay. Just going to go out to the hourly and then get out of this. And that's exactly where we came into, right? So that was our 5-minute last point of supply here, with really in that LPOR range, that last point of return. That higher high, the overall pullback, this is the range of this entire expansion. We came down into that level essentially to the exact T if I scale in. So what this means is that I am looking for a higher high. I'm not... That's why I'm not taking a position right now, because yes, we are still extremely bearish in this current time frame. We haven't broken structure yet. However, that's what I'm looking to see. I'm looking to see continuations to the upside. And if we get a closure above that high, we definitely are bullish again, and we need to be looking for longs. So in the current time, we still are making lower lows and lower highs. We haven't closed above that level yet. So what I'll be looking for is we can see sort of like a retail trend line here. If we get some sort of, clear liquidity run higher high to signify, institutions are not willing to take price any lower. We've swept sell side liquidity, and now we're entering orders into the market to long, and we get a higher high here, then that would be really good for a pullback to long. So my overall bias is long here. I'm just not, we're not there yet. If we get some sort of price action that looks similar, you bet your bottom dollar that I'm going to be looking to buy this. But we have to be patient because we're not yet at a point where all of my rules are met in order to take a trade. So it's going to be patient there, but I want to see further upside. And if we get a lower low here, oh well, at least we're not in the trade and we don't have to force anything. Okay, Euro GBP. So with Euro GBP, it's very interesting what this looks like. The pound is overall bullish. I want to see further, further downside on Euro GBP for at least the short term, right? So higher time frame, yes, we are extremely bullish, right? We're making higher highs, higher lows, higher highs, higher lows. We have broken the counter trend here, right? So this is our overall pullback, low, high, low, high, low, high. And we had that like third touch of the trend line where retail was trying to go short, but now we've ran the liquidity. So what I think that could happen, we have two possibilities here. We could come back down into where we expanded out. So this imbalance down in here, right? So we broke the structure. So it could come back down 8660 or 8630, coming back down into this level before potential longs. Or we could have, obviously the fake or the breakout here. We have 1, 2, 3 touches. We faked out, swept liquidity, and then continue lower into 8.5 because 8.5 is that last point of return here for this particular expansion, right? Because we have one expansion, we have one pullback. We have one expansion. This is still the overall pullback, right? So let me just get rid of all these markups here. I'm going to go into 8.5 really quickly. So whenever we're looking to see where price may come into, we have to look at the prior pullback that occurred, right? So we have a low, we have a high, a low, a high, a low, a high. We failed to make a lower low and a higher high. And you can see the imbalance that has been created here. Just straight buying volume. There was no selling that was offered within this region of price, at least higher time frame. So most likely we need to come back down and fill this imbalance. I was hoping that we would get that push in here when we were selling at these swing points, but we never got it, right? We stopped and we made a higher high from that. So this just may be the excuse, right? Because we have 1, 2, and 3 touches here, meaning retail's probably involved right there, placing their stops above, the previous high. So we could run the liquidity, which we did, and now start to fall either back down into imbalance to take it long again, or back down into 8.5 and then look to take it long again. So we have two possibilities. And I think that we are, for at least a short term, going to sell off. What else is this? This is also a break and retest of, retail formation. So of course we have that 1, 2, 3, 4, 5 touches. We broke, okay, retail traders lost. So, okay, now we're bullish. Let's look to pull back. So I've extended this trend line, and this is exactly what retail is probably doing, right? They're extending this trend line and seeing where price could come into and tap into that trend line. Trend lines they baffle me because it makes zero sense as to how liquidity and volume and the relationship between buyers and sellers come into the market. Why would orders, higher time frame, or at least higher volume or higher capital orders be influxed here? What would be the advantage to a institution to take price long? Why would they be buying right there? Okay, let's say you may say, oh, it's because of the trend line. Well, what is a trend line? How is a trend line helping them to make money? Where is the exchange between buyers and sellers? Where is the profit being generated from that? You have to have liquidity in order to take price a certain direction. So let's just say that everyone's looking to buy because they're trading this trend line here. Well, where is the liquidity in order to do so? That's why it doesn't make any sense. And that's why you need institutional manipulation in your trading, because that will really guide your overall trading decisions. But it makes the most sense because in order to move price, you need someone on the other side of the market in order for you to do so. Any singular push here, right? They needed sellers in order to take this long. They needed buyers in order to take this short. That's why schematics and Wyckoff come into play. That's why institutional manipulation is real. And it's exactly how the markets move. So we have to understand what the retail traders are doing and then do the opposite, right? That's what I say, you know, observe the masses and do the opposite, right? Because you don't want to follow the sheep. You follow the sheep, you're going to get slaughtered, right? So they're most likely buying in here, which would generate some sort of push to the upside, and they're going to be placing probably their stop loss below the low. That would give us the conviction to take this short back down one into our first objective or our second objective. So I'm really liking shorts for the time being. Now, if we get a push back to the upside, well, then all bets are off and I'll just sit on my hands at this current time. Scaling in, we have buy side liquidity to run here and here. And then if we zoom out just a tad bit, we can see that, you know, we have made a consistent higher highs and higher lows. We have started to offload orders in here, and that is where we have broken structure back to the downside. So we could be in for some overall pullback before continuing long here. So where was that, I guess you could say, demand to supply flip? Well, let's look at our last sort of expansion before the break of structure. So we have, you know, high, a low, a high, a low. Obviously, this is demand in here. We have a high, we have a low. There's demand in here. We failed to generate a higher high, and now we make a lower low. So all of this is supply. But where is our most recent buying volume, or our last buying volume in the sequence before that rollover occurred? So that's going to be right in here, and I can probably scale in. Yeah, so this is going to be our last buying volume here before that sell-off. So I would like to see pullbacks, sweeping buy-side liquidity into this level of supply. It's look to take short at least into 8,660. That could be our first target. Second target could be 8,630. And then our final target could be 8,500. Why those specific levels? Because they're areas of interest in the market based upon price action, supply and demand that have a probability, a possibility. I wouldn't necessarily say a high probability, but possibility that the market could reverse from those levels. So that's exactly where we need to be taking profit. Okay, so going to be looking at that level. So you can mark off 883250. You write that down. Euro JPY. So remember how I said on CHF JPY we're looking for overall longs, right? And I think, you know, XXX yen could possibly go long overall. Okay, so let's take a look at the higher time frame, see where we could be coming into. So higher time frame, obviously we are currently still bullish. I want to come up into 150. 150 is that previous swing high over to the left here, our most recent psychological level. I do think we're going to be taking that buy side liquidity in the direction of trend, right? Because we are extremely bullish. Right? If we just zoom out here, we've made a high, we failed to make a lower low, and now we're starting to just continue with this trend. High, low, high, low, high, low. I want to see continued buys before any significant selling could possibly occur, and that would be above 150. You know how much liquidity is probably resting above that level? If the institutions are looking to take this short, or at least have an overall pullback before continuing long maybe, I think they need to come into 150 before doing so. And I could be wrong, of course. You know, I'm just a trader too. I'm just human. I don't know exactly what's going to happen, but that's why we create probabilities behind our trade setups. The higher probable trades that we take, you know, the more times we're going to win them. So scaling into the 4-hour time frame, I'm just going to zoom out. I know it's going to be blurry. I'll zoom in a minute. We have our high, our low, high, low, high, low, high. I would say that this is, you know, this is the previous swing point. I mean, yes, this is definitely a pullback, 100%. However, we have created equal lows right in here. Price has generated those equal lows. So I would not be surprised if price swept those equal lows before continuing, right? So that doesn't mean that because we closed below this level, doesn't mean we're bearish, right? We have to use common sense a little bit and say, okay, we are overall bullish in this market. Let's look to continue to take this long. So sweeping those equal lows before continuing long is probably what we could see. What we also could see on a higher time frame, potential shoulder, potential head. If we get that push up into that supply level, which I'll talk about in a minute, that could be that right shoulder for the fake out and then the continuation, possibly something like that, right? Who knows if that's actually going to happen. But on the daily time frame, I want price to, maybe it's better seen on the 4-hour. Below these equal lows, we have our last sort of selling volume. Okay. Obviously, this is the low that generated the new high way up here. But this is our last selling volume on the higher time frame. Okay, so that's where I want price to push down into 137 would be that good price. However, from last Friday, I think that it would be a possibility that price may have an overall pullback before continuing short into that level. So obviously we are in a, pullback, expansion type of pullback, or excuse me, expansion, pullback, expansion type of play here. We've run buy side liquidity. We've come up into a lower time frame level of supply, filling the imbalance, pulling back into demand right there, failing to generate a higher high and having that overall lower low. So this is the high that when this low is broken, created the new lower low. These are equal highs, so I would classify this as the overall low. So if we get an overall pullback, it wouldn't be a break of structure to the upside, most likely. It would just probably be a liquidity run to mitigate our level of supply here, to then maybe take it short down into sell side liquidity below these equal lows into that higher time frame demand. So guys, if you are confused about anything that's going on or anything that I'm talking about, please, please, please ask me questions. Send me a direct message after this call here. I'd be happy to help clarify anything that you're having trouble understanding. But also, these live sessions are really not meant to be a direct, it's definitely a learning experience. However, it's not meant to teach you my strategy. It's meant for you to kind of maybe already have an understanding of smart money, but just provides you with some extra further direction and potential setups. But if you're looking at more of a streamlined process, then I would highly, highly recommend my educational course material. That would really help clarify a lot of things, so you have a full understanding of what everything means, and not only what everything means, but why we're looking at what we're looking for. There are very specific things. I've been getting a lot of questions about, my material is very good in terms of opening up doors when it comes down to understanding and applying the concepts. But I've also gotten questions in regards to, people who have just been watching my YouTube videos. They're like, well, how do I actually apply all of this stuff in a very, simplified manner? So of course, my YouTube videos are just surface level material. It's just there to provide, extra value. And it's really not meant to teach you step by step how I approach the markets. That's why we have that mentorship program available. So if that's something you are interested in, head over to my website, arielfxtrading.com. I would love to talk with you more about how we can best help you. So book a free call with me. The call is free. It's very brief. Just wanted to chit chat about how we can help you. And that's it. So getting back into it, I am looking to take a short from 143.86. So if we get an overall pullback into this level, you can see the expansion, and it would just be an overall pullback. And that way we would have conviction to take it short from this level of supply, because not only is this supply, we're currently in a downtrend. We have a lot of imbalance here, just straight selling volume. And we also have conviction in regards to selling because we have equal lows. So that would be a good target for the institutions to take or come into if any long higher time frame are going to come into the market there. So now let's zoom into a lower time frame and see what was going on. So all in here is, I'm not going to really go into this. If you scale in lower time frame, you can see each and every level of demand being met very nicely. This past Thursday, during London session, we had a significant decline, right? We had the huge push up, the huge push down, the huge push up. We kind of are sweeping liquidity on either side of the market. So we can see this prior low in here and this prior low in here was swept by that wick, right? So that's a liquidity run. We pushed higher, expanded from it, failed to generate a lower low in the market, and then expanded again. So I would not be surprised if now we start this overall pullback and we continue long, take out buy side liquidity, come into our level at 143.86. So I am going to be looking to take this trade here, this level of demand. So I will go back and add all this stuff to the track record. So the live stream track record, at least, because I think this is already talked about. I may not have put it into the VIP one. I'm not sure. I'll have to go back and check it out after this. But anyways, looking to take a long from that level, right? We swept liquidity. We are making higher highs and higher lows now. We failed to generate a lower low here. We made a higher high. So looking to kind of pull back and expand again, taking out buy side liquidity into our higher time frame supply level up there. So that's what I'm looking for. So let's see the price. 139.426. All right, 139.426. Euro USD. Okay, how many pairs? 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, I'm going to do 4 more and then we'll take some questions and then we'll finish up with the last part of the session. So higher time frame, where are we going? Of course, we did our analysis on the dollar. We are continuing to push lower on the dollar. So what that would mean for, any XXX USD pairs is we're going to be pushing higher most likely. Okay. So with that being said, we don't want to complicate it. We don't want to, be so, like, oh, well, what's every little solitary swing point that's going on? Because if I break it, then I may have a trade to take a counter trend short. Don't complicate it. Just look at the overall picture. Ask yourself these questions. Where are we going, right? Where is the current direction of trend heading? Bullish. Okay. So we should be looking for longs. Great. Where are we targeting? Where could price come into if I am in a long position? Where could price potentially come into that would maybe reverse and go against me? Well, that's where we just have to kind of scale out and look at our overall levels. And I think that, that will probably occur if it's going to occur. And I'm not saying it's going to. I'm just saying if it's going to happen, it's most likely going to do it around 1.17. That's our last buying volume before the expansion, right? We can see this overall pullback that started in 2020 after the 2020 crash. And we had that failure to generate the higher high and the lower low. And ever since 9595, we have expanded. We have broken the counter trend structure. We are in a pullback phase. Dollar is extremely weak. But could we break this high here? Well, let's look at the higher time frame. Let's look at the weekly. That's a possibility. If we just scale out, ever since we started back in 1970, it's the same thing happens on every time frame, guys. Lower time frame, higher highs and higher lows. It's the same thing on the higher time frame. The market is very fractal. So this is our most recent swing point. That's the swing point that generated the new higher high. We had our overall pullback. We've been in a pullback phase since 2008, right? So we finally come back down into our last points of demand here. We can see that our final, selling volume, we pulled back and then we failed to make a lower low. Kind of did it again here. So that's why we kind of had 2 levels there, but that's where we started to expand and then finally go long and make that overall higher high. So 9595 and 93320 were our 2 levels. And that's exactly what happened. We swept liquidity very strongly, and remember I said before, trickle-like state, low resistance liquidity. That would be really in for a big expansion. So I think we could really go long here, a higher time frame. If this is the actual low in the market, we could easily blast off. So not sure if we're going to come back down into 93320, most likely not. But we've had a very strong reaction from this level, basically to the T. I have a lot of confluence surrounding this, so I'm going to be treating this as any single excuse to buy. We should do it. So where are we headed? Well, at least 1.17. So that would answer the objective question. Now we have to look at the lower time frames. Ask ourselves, where are the lower time frame swing points? And don't try to be too precise with it. Just be general, right? High, low, high, low, high, low, higher high, higher low. Right? This is one expansion, one overall pullback, another expansion here. So let's just say we start to pull back. That would be that previous high. So this would be the range of the new higher high. So where would we look to take our next buy position? Well, it'd be from our higher time frame levels of supply in here, right? So our last selling volume kind of comes into the market here at 1.06350. Now I have this level here because we may not get a deep pullback. We may not see like an 80 to 90% retracement. We may just get a slight retracement and then a continuation, right? So that's the last, or the last selling volume. And we can see here, we had a high, we had a low, we had a high, low, failed to make a higher high, lower low, pull back into supply here. Again, failed to make a lower low. Obviously, we're in a bullish uptrend, and then we expanded again. So that will flip from supply to demand, that entire thing. So we can be taking positions off of 1.0635. That would actually be probably preferred by you guys, because at least you can most likely get involved in the market without having the FOMO come into play. And what do I mean by that? If you're looking for the most precise entry possible, the highest risk to reward trade, you may identify this level of demand as that level. Now, that is definitely a valid level. I have all 3 of these positions highlighted for a reason, right? But what if price comes into this level, maybe even comes into the imbalance here, and then starts to push away? Well, in your mind, you would most likely think, okay, this trade I have identified for however many days, weeks, or months before it came into the level. It's actually playing out in my direction. My analysis was correct. However, I'm not in the trade. What do? Most people, and I'm not saying you guys in particular, but generally most people will have that FOMO. They will chase the trade because they don't want to miss out on the move, especially because they already identified the level and they missed it because they were trying to be too precise. Now, not to say that this is wrong to be looking for entries down in here, definitely, but have multiple levels if there are multiple positions or multiple areas where price could potentially reverse from you, right? So you don't want to be caught up in FOMO where you're now entering buys here and now placing your stop loss there for price to have an overall pullback. Now it comes into your level, stops you out, and then goes. And now you're missing the overall move entirely. It really helps with the psychology, because if you just get into this position and it just goes like that, well, then at least you're in the market and you don't have to worry about, not making money or FOMO in that regard. Same thing with confirmations. This is why I always like to just place my buy or sell limits at the overall levels of the market. Why? Because it prevents me from having FOMO or anything like that chasing the trade. Higher time frame levels. Yes, this is not going to be the best risk to reward in the world at all. Of course not. That's why we have multiple positions. If we have 3 positions here, 1/3% risk, 1/3% risk, and 1/3% risk there. Because why? If price goes like that, at least we only lose 1%, and we're not losing 3% on 3 individual positions. So I would recommend placing, like I said, third, and third. And that way, yes, this risk to reward here isn't going to be large, but this one's going to be bigger, and then this one's even going to be bigger, right? Because then you won't have to worry about if price comes into here. Now you're scaling in to like the 15, 10, 5-minute time frame, looking for the lower time frame confirmations that you may not even get in the first place. Sometimes, yes, sometimes you will see a clear, accumulation and, sell to buy or whatever, and then you would get the retracement and then you'd be able to get into the market. Yes, that is good for confirmation for sure. However, what if you don't get it? What if you come into the market and you start to trickle away? Well, again, the same thing occurs. You're looking just for confirmation and not just placing your orders at the overall level. So you're getting into the market, or you're not getting into the market here. You're waiting for confirmation. You never get it. So again, FOMO takes its course, and now you're entering somewhere up here or up here instead of down here where you should be. So like I say, if you have areas of interest that you have confluence for that meets your rules, maybe reduce your risk, but just place the limit orders. Because what you could always do is have multiple levels just in case, this one and this one get hit, but not this one. Or if you're, not just looking for confirmation, you don't have to have that problem because you're going to be open, your trade will be open there. And then if you get confirmation, great, you can add the rest of your risk on board. If you don't get it and it just continues, well, at least you're in the trade there and you don't have to worry about your psychology. So that's just what I recommend. Just get in at the levels of the higher time frames and then scale in. And if you get additional opportunities, by all means, take advantage of it. And if you don't, at least you're in the trade to begin with, maybe on reduced risk to where you won't have that FOMO. But at the same time, if you don't get confirmation and price just blitzes right down, well, at least you're not losing a ton of money because you've reduced your risk. So just some advice for you guys in terms of managing positions and all that stuff. So where am I trying to get at here? Sorry, guys. Euro USD, obviously those 3 levels we're looking to long from. We can see this retail trend line, 1, 2, 3, 4, potentially 5 touches, right? So retail is probably involved in buying the market at this particular level. So there's really nothing to play off of in here. If I scale into a lower time frame, I don't really see anything that strikes my attention, right? There's no institutional liquidity run. There's no clear demand levels here. We are overall bullish, so why are we even looking for shorts? We're not looking for shorts at all. Here's another learning point here. Equal highs, buy to sell. Not all the time is it going to be appropriate to pull back to short it. Yes, this could be a sponsored move, but it could just be a short-term liquidity run to take out any sellers in here, run liquidity to the downside, attract sellers into the market upon a pullback, and then just kind of continue to trade long. Because why? We're overall bullish. We don't need to be having that, the probability in a bullish market, even if seeing this particular price action here, the probability in a bullish market trying to sell it is still significantly low. Now, you could take the risk. Let's just say that price, I don't know, sweeps liquidity that beautifully, creates that high, creates that low, creates that higher high, swept liquidity, and then makes a lower low and starts to retrace, you can be looking to take positions off that level of supply here because you've broken and made a lower low, and that would give you conviction to take it short because we have the overall objectives, the higher time frame levels to come into. At that point, you could potentially take a trade. However, what if price just goes like this? Well, then you have to just take it on the chin and be like, okay, I lost a trade. Obviously, use good risk management, but then turn around and look at this from the perspective of, okay, we swept buy side liquidity, attracting buyers, comes back down, taking their stops, attracting sellers below the low, comes back up again, took the stops of the sellers. Everyone has been shaken out. Cool. This is an institutional manipulation, higher time frame. Now we look for a pullback to continue along. That's how we need to treat it. So there will always be opportunities in the market to get into a position across the board of 26, 28 pairs that there are. There's going to be opportunities, guys. There's no need to force a position because maybe you lost a couple trades in a row and you want a revenge trade, or you haven't been in the market for a day or so. It's okay. We're not meant to trade every day, every hour of every second of the day. That's not how trading works. I know that you get dopamine rushes when you're placing positions. Do you want to get a dopamine rush? Go to Vegas. Go to Las Vegas, Nevada. Go gamble there, right? You'd have more fun losing in Vegas than you will losing in the market like this. So I would just recommend, take it from a more professional approach. Even if you only had 1 or 2 trades a month, how many people would be okay with 1 or 2 trades a month psychologically? Probably not many of you, right? I'm just being general. When I first started trading, I wasn't. I always wanted to be in a trade. This is how we are, right? Because we want to be involved, want to be making money. When we're not making money, we feel like something is wrong, like we're missing out, and we're, not being involved when everyone else is being involved. It's all a psychological trick, okay? You have to have all of your confluences and rules being met. And if it's not met, and if the probability of you losing the trade is higher than you winning the trade, well, you're most likely going to lose the trade, right? So at the end of the day, fine, you get into the market, but then you just lose money anyways. So you have to take it from a more, professional approach, from a more business-like standpoint, and treating it like a business and not just like a fun little hobby. Trading is not supposed to be a fun little hobby. It's supposed to be taken seriously. It can be a career, right? It should be treated as a career. So anyways, guys, sorry about that. What I would look for is I would look for some sort of liquidity run, manipulation to start the week, maybe taking the prior week's low. That's the prior week's low. Yeah, that is. So taking the prior week's low maybe, and then making a move back to the upside. So we've taken, sell side liquidity. We made a higher high, then we can pull back and look to continue with the rest of the week. If we see something like this, that would be something I am looking for if we're trading within this kind of short-term trend. If we end up getting the overall push, then great, we can look to buy in here. But I don't really see anything in terms of a setup. I'm just waiting for more price action to show me otherwise. So if I see some sort of manipulation throughout the week, then we can be looking to take advantage of it, knowing that we're overall bullish, the dollar is weak, so we know the direction we're looking to trade. All right, that's Euro USD, Euro CAD. So we have a couple of levels on Euro CAD, and I'm actually liking a potential hedge on this pair. Okay, sorry, I had to get my coffee. Anyways, higher time frame. Where are we going? Long or short? Long, right? Simple. So what do we need to be looking for? Long positions. Where could we be getting into the market? Now, another piece of advice. Just because we're bullish doesn't mean there's always an opportunity to get into the market long, right? There's not always a clear area of interest to get into the market. We are extremely, let me go to a random pair here. GBP JPY. We are extremely at this current time. Well, actually, that's not a good because we're kind of in consolidation. NZD JPY, again, in consolidation. Let me try to do a better one. Maybe Euro Swiss franc. We are extremely bullish here right now, but I don't see any opportunity to get into this market here. Just because we're bullish doesn't mean there is a opportunity to enter long, right? So I'm just trying to help you guys out in that regard. Just because we're bullish does not mean that, we are overall, we're going to be looking for areas to buy. Obviously, we're looking for areas to buy, but there's not always going to be them. So if I just zoom out, and I'm actually just looking at this now, I didn't see this earlier. There is buy side liquidity resting right above that high. So let's actually make this, to be more precise, 4650 psychological level, key psychological level. Where could we be heading before maybe potentially moving against us? Well, Well, we have buy side liquidity resting above here, essentially equal highs. So if price just runs the liquidity and goes short, where's our most recent supply? Not saying we're going to go short from here, but probably right there. Right? We have high, low, high, low, high, low, high, low, failed to make a higher high, lower low. Now, obviously, this is all just intra-trend supply, like all of these levels are. But remember what I said before, these are relatively equal highs. So how would the trade go against us? If we get into a long position and price starts to go long, how could the trade go against us? It would go against us if we run liquidity, come into some sort of supply level and just have an overall pullback, maybe. I don't know. Something like that. So where could we be looking to take partials or at least overall profit? Well, let's see. Low is 3,550. We're going to make this 3,5 to be more precise here. Here we go. That's where we would look to target, or at least have some sort of partial profit being taken. So the current trend, higher high, higher low. 1, 2, 3 touches, sell to buy. We actually sold and accumulated to then buy. We can see accumulation, last selling volume, push up, failed to make that lower low, made the higher high. So this is our accumulation below institutional, well, I wouldn't say institutional liquidity, but retail liquidity. So that is our higher time frame level because this is the low that generated this new high. If we get an overall pullback, doesn't mean this is a break of structure to be looking to go short. It just means that we're looking to have an overall pullback in the market into our higher time frame demand to then take it long into our objective, at least 4,650. So I honestly, I really want to see this high, or excuse me, 4,650, let's just call it, stay intact. Meaning I don't want to just go up and run it really quick and then come back down, because then the buy from here would be a little iffy, because if liquidity higher time frame has been taken and then price starts to move away from it into our area that we're looking to buy from, the probability kind of goes down in regards to, winning the trade, because then this could just be used as the excuse to sweep liquidity, and then we could have the overall pullback in the market potentially. Who knows? So I want to keep that high intact. So what we could see short term, right? And this is exactly what I meant in regards to seeing reversals so easily. You see this as a high, low, high, low, high, low, high, low, high, lower, low. Many people are like, oh, pullback to short. And then they just continues long, because we're in an overall uptrend. We should not be so quick to shift our bias. So in here, that's exactly what occurred. We pulled back probably into the 61.8, probably some sort of retail fib. Yep, 61, 71%. And then the price just continued long. So we come into supply, and here, this is the start of our last buying volume. We come into it, we fail to make a lower low, and we make a higher high. So this will be that supply to demand flip. And we can see in the process of failing to make a lower low, we come into this last selling volume here. So if I scale into, let's say, the 15-minute, you can just kind of see that mitigation. You can see a lower time frame demand right there, but really just imbalance, 1.45 psychological level, round figure. So that's what we're going to be looking to buy from. We have our higher high, could have a higher low into 1.450. You could put stop below this low here, or to be more conservative, below the overall low right there. And then looking to buy first target into 4,650, and then 4,750 could be another target there. If we get a break, if we get an overall pullback, because remember, this is a high, this is a low, this is a high, we could get an overall pullback and still maintain our bullish structure in terms of higher highs, higher lows, right? So that's a possibility. So we still are holding our position open, or our pending order open, at 43340. So 1.4334. However, if we take a look at the lower time frame here, could there be an opportunity to hedge our position just in case we actually go short? And there is, because we have the high, we have a low, we have failed to make a higher high, and we have made a lower low again. So currently we are counter trend bearish. So what if, we get into this long, we get into this short, and then price doesn't go long and goes short and comes down into our overall level? Well, at least we're hedging, because we have confluence for both directions of the market. We don't just hedge just to hedge. We have to build confluence for each individual position, right? So that means that if this loses, fine, we lose, let's call it 1%, but then we win on this. This could easily be a 1 to 4, 1 to 5. So let's just say 1 to 4, right? 1 to 4, 4% minus 1% on the loss, you're still netting profit. Hedging is not always a bad thing if you know how to do it right. So where's our most recent swing point? Well, obviously this is the high that created this low. So let's just say we get a pullback. This is our most recent buying volume. right? We've made a high, we've made a low, we failed to make a higher high, and a lower low was formed, starting this counter trend downtrend. So that would be my level in which I look to pull back into to short off. So this level of supply here is very good, along with this level of imbalance in demand. So looking to buy and looking to sell. All right. In the process of failing to make a higher high here, we come up into this area of supply. I would never have sold it there. No way, because we're clearly in an uptrend. But the fact that we reacted from it and made a lower low and then generated sort of this last buying volume gives me more conviction for pullbacks to short. All right. So that's what I'll be looking for in Euro CAD, GBP AUD, just as I talked about probably a few times. I think I must have talked about it. I know at least on one of the live sessions last week, whether it was Saturday or Wednesday, I don't remember. But I said that we still are continuing to make higher highs and higher lows. That's our most recent swing point low that generated this high. Did this low take out that low? Let's put that right there. We did not. So if I just get rid of this, obviously you can see we did not take out that low. So that says we are still bullish. We have literally retraced 99% of the way and are starting to make a new high now. This tells me that we're still maintaining our bullish structure. If we go down to a lower time frame, we can clearly see the accumulation, right? Accumulation, lower time frame accumulation. And then we expanded. We failed to make a lower low. We mitigated this last selling volume, and then we made a higher high. So I would be interested in looking for pullbacks into 1.7650, our most recent level of demand that failed to make a lower low. Instead, we made a higher high. So that flip from supply to demand, looking to take that long from that level. Okay, that would be something that I would be interested in. So let's just zoom back out. It's interesting because Aussie dollar is still bullish too. So what would that do to GBP AUD? Let's just say even though the pound is still bullish, what would Aussie strength do to a pair like GBP AUD? And this is where you can take your education a step further and understand, which pairs or which currencies are more highly influenced by the particular pair, meaning something like Euro GBP. Euro GBP is really a pound pair. It has a high influence in pound movement, but GBP AUD is more Aussie, right? That's just something that comes with experience and time and understanding the market. And I won't get into the deep understanding as to why that is, but that's just how it is. So understanding that Aussie is still bullish, could this just be a liquidity run to go short? Potentially. Why do I say that as well? Well, we have a wedge pattern here. We have a wedge pattern. That was a terrible line. A wedge pattern, clearly 1, 2, 3, 4 touches, 1, 2, 3, like clear wedge pattern that we just cleanly broke out from. So everyone and their mother is probably looking like, oh, they broke out, now I have to buy it. So could this just be a liquidity run to continue short? Maybe. And that in that way, we would probably want to maybe look for hedge positions. So we have this buying volume here that we mitigated. If we go like this and make a lower low, I may want to look to hedge it, to take it short, but then still buy it here just in case we end up actually going long from it. So we'll just keep a close eye on that. VIP, I will keep you guys updated with what I do here on GA. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, one more, and then we'll take some questions. So on GBP Swiss franc, again, it's very interesting. The pound is still bullish. The Swiss franc relatively weak. So that just gives us more conviction to buy GBP Swiss franc. However, if you look at the price action, I know we have a lot of markups here, so don't get too confused. Just look at what price is doing. We've made a high, we've made a low, we've made a high, we've made a low. We have not made a higher high, but again, we have not made a lower low. So we're kind of stuck, kind of wedging ourselves. So this is where we have to just be a little careful. Okay. So we're not making higher highs, but we're not making lower lows either. We've had many different opportunities in here to buy because we have accumulated in price at that level of demand that mitigated this previous level of demand that was created after the liquidity run to the downside to continue. And at that time, we were extremely bullish, right? So we've accumulated, we've expanded. So we've had a couple of opportunities. We had one from this imbalance in demand in here. We've had one from the failure to generate the lower low, higher high supply to demand flip in here. And then we had one on a lower time frame when we swept liquidity very nicely in here. We've kind of accumulated into that level, sold to buy, broke the counter trend, pulled back into that level to go long. So we had 3 levels. We are holding in really good profit right now. I think that we could easily see further upside, but I am looking to hedge this. And I am in this position right now. This is very slight profit, aiming for a 1 to 13.4 on this one, a 1 to 13.1 on this one, and a 1 to 11.4 on that one. But I'm also aiming for a 1 to 9 on the shorts because, like I said before, yes, we are currently bullish. We're not making lower lows, but we're also not making higher highs. So this is where we're kind of squeezing ourselves in the sense like, could we be going short or going long? The answer is yes and no to both questions. Who knows? We swept descending liquidity very nicely. Swept it, pulled back. This is our bullish trend. We failed to make a higher high and made the lower low. So this will be clearly that flip from demand to supply. That's exactly why we have that hedge position at that level. Higher time frame. The reason why we stopped there, we swept liquidity and we stopped at that particular point is because that was, where we again failed to make that higher high. We came into a level of supply here on the lower time frame. We can see the high, the low, the high, the low, the high, the low, the failure to make a higher high, and then we started the downtrend. So that was that supply level that was unmitigated, and that's exactly why price came up into that particular region. Now, of course, you would obviously be expecting a higher high. We don't expect higher lows, lower highs in an uptrend, right? In an uptrend, high, low, we would easily be expecting a higher high. We never would have taken that short, but the fact that we came into that level, swept liquidity, made a lower low, and now we're pulling back, we could potentially go short from this level here. But again, we could easily go long from it. So I don't have any other, I don't have any other areas of interest to show you for new positions. For those of you who have taken this, VIP, you're currently in profit here to the T, you're currently in profit here to the T, and then here to the T as well, essentially. So all of these positions are sitting at break even, right? Hold in profit, take partials, especially at this level, because this is a potential reversal zone, and then hold and see what happens, right? We're also in this position short, stops are above the high, looking to fall. So just trying to give you guys an overall understanding of what I see on GBP Swiss franc. There's really no additional position that you guys can get into to start the week. It's more of like, let's just see what happens with what's been described. Okay, I'm going to stop sharing my screen, take a few questions, and then we'll continue with the rest of the live session. All righty. Sorry, guys. I just haven't been able to see the chat here throughout the entirety of the live, so I'm just looking at it now. Let's see. U.S. oil. Yeah, sorry, guys. I don't really trade commodities. I'm really just a Forex person. I specialize in Forex pairs. So I'm sorry I can't really help you there in anything but Forex. Let's see. Can you do GU as well? Let me take a look to see if that's one of my pairs. Yes, that's actually the next pair I'm going to be talking about. Perfect. Dopamine rush on NFP. Yeah, news events can trigger in a lot of inexperienced traders just because with news events, usually there's a lot of volatility, but that volatility is pre-planned. So the levels in which we're looking for anyways, if there was news, great. It can be used as the excuse to push price in that direction, push price into a level of mitigation, of imbalance. It's the same thing. It would do the same thing if there wasn't any news. It would just probably do it much slower, right? Because news is just used as the excuse to inject volatility. But it is a trap for retail traders because they think it's random, but it's not. Is it good to compare markets, for example, gold and DXY when there is a trade on gold for a further confirmation? Potentially. I've heard that before. I've heard, U.S. oil and the Canadian dollar is because Canada is a major exporter of oil could impact, kind of correlates together. I've heard gold and the Aussie dollar are good correlations. I don't really pay too much attention. I'm not going to say it's a bad thing. If it works for you and you know how to kind of utilize both at the same time for a potential entry, then great. I just don't do it just because if you're looking to trade gold and not the DXY, but you're looking at the DXY for a potential confirmation on gold, what's going to tell you if gold is going to react off of the level in which you're looking for it to react from? Not the DXY. It's the thing you're trading, right? The gold is going to tell you where gold's going. Just like the dollar is not going to really tell us what exact price point Euro USD is going to react off of. Euro USD is going to tell us where Euro USD is going. So you can use it maybe as sort of a confluence potentially, but I wouldn't bank off of it in its entirety or by itself. When price comes into our objective, what do we look for in a lower time frame to get involved? So this is a very broad question, something that we discussed in our course material, but I'll try to answer it. So when we look for our objective, we're looking for, let's just say that we're pushing down into a higher time frame level of demand, right? So we're looking to continue to move higher. So if we're coming to a higher time frame objective region, you really look for a slowdown in price. You want to see that, there's offloading of orders, right? There's not significant volatility coming into the market at that time. Maybe you look for institutional manipulation, maybe a sell to buy, maybe some sort of equal lows that price could come into first, or just very discrete lower lows and lower highs, looking for maybe accumulation to take involved. Now, to get into a trade, you want to still treat it as its own trade, right? So just because you may be reacting off of a level, right? So for instance, this is a good question, and this is probably going to help a lot of you out. I'm going to share my screen here and just go into a blank part of the chart here, scroll over. So let's just say this is an area of demand, higher time frame. So price is coming into it. Just because we may come into it here and then we have a reaction initially, doesn't mean that it's good to just pull back and go long, right? Because why would we wouldn't do that with any other regular trade. We have to build confluence behind it. So we would need some sort of maybe liquidity run or a clear, trend that has been broken with the reaction. Just because we see an initial reaction from it, it could just be profit taking, guys, right? Because if this is a higher time frame demand, most likely there's going to be orders there that are going to be taking profit, which would naturally push price in a specific direction, onloading, offloading positions. So just because we may have a reaction doesn't mean it's the real move. So I just am very patient with it. I don't trade right off reactions. Like if we go like that, I don't just trade right off the pullback. I will wait a little bit. Maybe we'll create some sort of liquidity till we can run sell to buy again, or at least just a failure to generate a lower low and a higher high again. And then we can be looking to have more conviction to take this long. So either some sort of, accumulation schematic, breakout, pullback long, or, reaction from it. I don't know, some sort of equal lows, even, prior to coming into that level. Sell to buy, we can take off the mitigation and go long, or, we sweep equal lows, sell to buy. We fail to generate a lower low here. We make a higher high. So clearly this is a real reaction. Now we can take it off the third drive, just something like that to show that we're looking to reverse. So be patient with stuff like this, guys. This is really what kills traders, because most of the time they'll just see this as their area of interest or objective, and they're looking to take it long from here. And so they're so quick to get in the market. Right when they see a little bit of a reaction, they just start buying, buy, whatever. And then price rolls back over, maybe comes deeper, takes their stops before maybe rising again. So just be very patient with it. Wait for a clear setup. Wait for a setup that you always look for. So like your perfect setup, right? Maybe institutional liquidity, counter trend, boom, 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 sell to buy, counter trend has been broken, liquidity has been taken, pull back into an area of imbalance or demand or sponsorship, and then take it long like that. It's not going to be this pretty every single time, but that's what you kind of want to look for. Be patient with it, because not all the time will there be a clear confirmation. We may have just a reaction and then it just goes, right? So that's why I say, if you're coming into an objective, this doesn't mean that you should just be looking for short. So this is what I mean. Just because we see 1.1820 or 1.2 as a potential objective, doesn't mean we should just be selling there. That's not what I'm saying. I'm just saying that if price is going to go against our long trades, it could do it at those levels. That does not mean we just sell it. It just means that we should be looking to take partials from those positions. However, let's just say that, for instance, these are levels in which you are looking to actually short from, which I don't recommend, but I'm just going to make it up. Let's just say it is. Then, like I said before, maybe place 0.5% risk here in case you actually get into the market and it just rolls over. Well, at least there's no confirmation, but at least you're in the trade. And then maybe look for, your lower time frame distribution, break-up structure, clear shift, and then you can add the rest of your position here if you get the confirmation. Right. So it's just all based upon what you want to do, your personality. So hopefully that helps. It is a very broad question. It just takes time and experience to kind of intuitively see this stuff over and over. Can we send our chart ideas to look over? Yeah, guys, if you want to, that's fine. You have my contact. You're more than welcome to. Could you give us one pair we do and we mark during the next session? Yeah, I mean, sure. If you guys want to take, because I always usually go over at least one or two majors. So any US dollar-based pair, if you guys want to mark that off, and I can go over it next session for sure. Sometimes S&Ds can be big, so how can one enter a trade in these POIs with a small stop loss for high risk reward? So again, you don't always need a small stop loss to have high risk reward trades. It's not about the pips, right? So, all right, I'm going to answer this question, but just let me think if there's anything else, because I'm going to share my screen and go over the rest. That's all surface level. Yeah, because I can't explain it all. See, it would take me hours and hours to show you, all the individual components of it, and show you so many examples and so many different versions of what I'm trying to discuss. I can't go over such in-depth stuff in just this session. You have to understand that, though. That's why we have course material to lay it out for you very specifically in an organized way, very systematically. And we have taken hours and hours, hundreds of hours to compilate all these different examples and teach you guys this. I can't do it in one session, or at least in 5-10 minutes. So sorry, I can't give you anything more than a surface level understanding. That's not really what I'm meant to do. I'm not meant to, teach you my strategy. It's here to just give you guys some overall directional bias and areas of interest. Do you trade Bitcoin on weekends? I don't trade Bitcoin at all. I just trade Forex. Let's see. The market is fractal, so you can use smaller time frames. So long as you have a system to confirm, like break structure and S&Ds. Yeah, absolutely, for sure. As long as you have a holistic perspective, if you have a top-down perspective, you have to look at the higher time frames before you can trade the lower time frames. But if everything is in alignment with each other and you're trading the lower time frames in conjunction with the higher time frames, then yes, if everything's fractal. You just use the same concepts for sure. Why not take the risk out and trade for a bank? Because I can make a hell of a lot more money trading myself than through an institution. Plus, I have my own specific style of trading. And remember, guys, banks trade. They don't look at price charts. They're not sitting on TradingView and looking at the structure of the market. They don't care about that stuff. They don't care if the market's going long, short, sideways, or backwards, or in circles. That doesn't matter. They're looking at the algorithms, the pure numbers. Where is the volume? If there's $50 million worth of stop losses at a specific level, they can just see that based upon the numbers in the order book. They don't have to look at the price chart in order to see that. So they just look at the numbers, and their algorithms do the trading. Yes, they can do some manual trades themselves, but I don't do that. I trade based upon price charts whatever the order book is telling us, where the institutions are getting in the manipulation that they do, that they create, is directly reflected in the price charts themselves. So, okay, so I'm going to go over that question, Bonalo. I'll go over that really quick, and then we'll get into the rest of our positions here, or our trades. So share my screen again, and we'll finish up. Appreciate you guys' time today. I really do. No, you'd probably rather be doing anything else on your weekend, but I do appreciate your time. So just because, we have, for instance, right here, This is a 72 pip stop loss. Many people would be like, oh, you're crazy. 72 pips, that's too high for me. Well, why are we looking at it from a pip standpoint? If you're looking at it from a pip standpoint, to be honest, you really don't understand how investments work or how trading works, most likely, because you don't base your trades around pips. You base your trades around percentages. So what is the percent return I would make on this 72 pip stop loss? It would be a 1 to 11.4. I don't care if your stop loss is 5 pips and your risk to reward is 11.4, or your stop loss is 500 pips and your risk to reward is 11.4. It's still the same return that you would get. So it does not matter about the pips. Obviously, it only matters about the percentages. So I'm not saying that if you have a big stop loss to then try to just put your take profit at something at like at least a 1 to 5. No, you have to put your take profits at levels that make sense. So that's why I have shown 3 levels here. And the take profits for each of these 3 positions are going to be 1, 2, and 3. I'm not saying that this position here, I'm just taking profit at 1.2. I'm taking profit on all of these at 1.2, but I'm just showing you the different take profit levels here for each level. So in this case, higher time frame, really quick, higher time frame, this is a clear level of supply in here. This is where we could see that overall pullback. If we are to go higher time frame short, this is probably where we want to pull back into, at least this redistribution before, again, the expansion. So that is a highly probable region that price will probably push up into, psychological level as well. And then we also have imbalance in here to fill. So with that being said, you know, I based upon a proper take profit, this would be in a 1 to 11.4 regardless of the stop loss. But you can't just place your stop loss wherever you want to. It has to be in an appropriate level. Let's just say you want a 20 pip stop loss, right? So 20 pips is probably like right here, right? Well, why would placing your stop loss here be appropriate? It's not, because price could come into that level, go long, hit your stop loss, but just come deeper into this demand. That's why stop needs to go below here or below the overall low. So, you know, what you could do is you could scale into this. You know, you could say, okay, if I want to put my stop here, I don't want to enter here because then this would be a bad risk to reward if that's what you're thinking in your eyes. Then maybe you scale into this wick and try to find something. But again, look what happened. We come into our original area. We did not come into maybe something that you may be looking for in here. And then we start to go long. And now this huge push, now you're chasing the trade because you have FOMO and, you know, all that terrible stuff that traders have because they didn't get into their precise position. And now they're buying up here instead of back down here. So that's why I'm saying just get into the overall level. If it meets your risk to reward rules, just place a small position at this level. Yeah, if you have another position here, great. Just like we have for USD CAD that I'll go over in a second, right? This right here is a ridiculous risk to reward because I'm only looking to target 1.32. So placing my stop above here with this entry is not a good risk to reward. But that would be the appropriate stop loss I would need. But I also have a different position. I just got into this position. This isn't really in premium price. Into this imbalance, 1.36 psychological level that I'll talk about in a little bit, that is in premium. That's a secondary level. But again, I'm in really good profit on this because I don't want to have the FOMO that I need to be getting in at just the most tippy top level in order to sell off. Sometimes we have just small retracements and we just continue. So if you don't get into this position and you're only looking at this position here, well, then you're looking at, you know, potentially chasing the trade in FOMO. Now you're looking to enter here, right? Because your psychology is messed up. And I'm just saying in general, I'm not saying you specifically, but that's why we can have multiple positions sometimes. So yeah, you can scale into the overall supply and demand levels and maybe have a secondary position, but placing your orders at just the overall levels is not a bad thing as long as you have the right risk to reward. And if you don't, then maybe you shouldn't place the trade. So it doesn't matter how big your stop loss is. I've had 100 pip stop losses before, but my risk to reward has always been there because it's an appropriate trade to take. So that's why if you can split it up, first position here, stop loss right at the second position. And that's where you have your second position. And that's where you have your stop loss there. So it doesn't matter. You're covering yourself with this entire area. It doesn't matter which one you get in. And so at that point, stop loss here, entry here, that's a much, much, much better risk to reward. And that's exactly what happened. We got that entry. All right. Hopefully that answers your question. If not, just send me a personal message. All right. So let's keep going. GBP USD. So just like AUD USD, just like NZD USD, just like Euro USD, we are continuing to push higher. I do think that well, for one, we're definitely going to come up and run that high. That's almost a given. 1.2450 cycle level, and we also have 1.25. That's a major cycle level. This psychological level kind of lines up with some imbalance here within a prior level of supply. I'm not saying that we're taking this short here, guys. This is just my overall objective to be taking profit on any longs that I have. So let's scale back in. Let's look at the structure again. We have created essentially all-time lows here. I think that's an all-time low. I could be mistaken. 1.0520, and that's where we started to make a move to the upside. So we're significantly bullish. Last week, I think, or 2 weeks ago, we created somewhat of a head and shoulders. We swept the neckline, enticing sellers with this push, and then we made a higher high. So again, many people looking to take it short, but they don't understand just the basic component of structure. Why are we looking to short the market in an uptrend? That's why they create these reversal formations and all these retail patterns look so pretty, just to try to trap you. Equal lows, swap them out, higher high. So we scale into a lower time frame. We already know this is a higher high. This is a higher low. We're creating a higher high now. So where would the higher low be if we have an overall retracement? Like I said, this would not be a break of structure to pull back and short. It would just be most likely an overall retracement to continue, right? So that would be, just scale in, back down into here. 1.1936, that last selling volume that swept the liquidity and made a move to the upside. But again, what is the probability that we come this far down and pull back? Not as high as a more shallow retracement. So that's why I also have 1.2. It's within that imbalance. Okay. Now, lower time frame, we are continuing to make higher highs and higher lows lower time frame. So we can continue to trade off this lower time frame until it breaks. Once it breaks, then we're looking for the overall retracement for our higher time frame levels to then be looking to buy again. So currently, we're still lower time frame bullish as well. So what do we have here? Let's look at the trend. High, low, high, low, high, low, higher high. This is the range of this expansion. So what I'm looking for is a run on Friday's low, or really, is it last week's low? Thursday's low. So sweeping sell side liquidity, taking liquidity here and the equal lows in here on a lower time frame. You can just see that right there. Relatively equal lows, and come into our two levels of demand, half risk each, right? We have a level of demand here, and we have a level of demand in here. So looking for either this or this, all right? So that's what I'm looking for, up into 1.25 at least. If we get a break, then I'm looking to buy at 1.2 and 1.1936. If I scale into the 15-minute, it is clear that we've made a high, a low, a high, a low, a high, equal lows. This wick ran this liquidity. You can just see if I put my cursor there, if you look left, that dotted line took out those lows, coming into demand in here. Okay, so this was the sell to buy. This is the end of the pullback. We had broken, made a higher high, failed to make a lower low, higher high. Again, we have not mitigated this level. So that's why that level is definitely still valid in my opinion. We have two right here, and then our overall one right there, just in case we get a shallow retracement and continuation. So those are my two levels there. You mark that off. We have our higher time frame ones down in there. All right, NZD USD. Same sort of deal, guys. You know, we had a major push to the downside here on NZD USD. Probably tricking a lot of people into thinking, oh, we're going to pull back and go short. We're still overall bullish. We don't want to be looking for shorts right now. If I would look for shorts, it would be if we go like this. If we, fail to generate a higher high, we break this counter trend structure. If we create something like this, we don't come into this first, and then we pull back, mitigate, then I would take it short because then we have room to go to the downside into our level upon, the failure to make a higher high, the lower low, and then we can look for that third drive into the low, into our overall objective. That would be the only way I would take a short there. If not, then, we're still looking for buys. So I don't really have anything lower time frame here on NZD USD. We kind of have a retail trend line. So I would like for maybe a liquidity run whether that be now or later, into 0.63 that just missed by a little bit last week. We are overall bullish on this. We have another level here around 6.265 or 6.26, just into this imbalance in that last demand level. So a couple of levels there and here. But lower time frame, I don't really see much. Maybe if we, I don't know, if we make a higher high, then we may come back down into that demand. I'm not quite sure. I'm sitting on my hands right now. I'm not forcing anything. If we get something like that, or maybe just something like this, then we can look to take that trade, liquidity run, higher high, higher low into demand that failed to make a lower low off of this supply, and pull back, mitigate, go long. Something like that. That's what we would be patient to look for, right? Trend, liquidity, demand, reaction, manipulation, pullback, mitigation, continue. That's the type of play that we need. And if we don't have it, well, then we just wait. We're patient. We just sit on our hands and just wait for either one of two things. Either we come into our overall level and then we buy it, or price just continues and continues, and then we just kind of delete these orders as we go because they'll be no longer valid, and we move on to the next setup. So that's what I'm looking for at NZD USD. Obviously, dollar is extremely weak. So kind of already went over USD CAD here in regards to trend and our first position that we got a wick entry on. We have equal lows here. We have equal lows here. Higher time frame, this is still just an overall retracement for potentially another higher high because we are definitely still bullish. Okay, so where could we potentially be looking to buy, or at least taking profit on ourselves? Well, if we just zoom out, it's this last selling volume. This last selling volume that created this huge expansion, we never came back down to test it. We actually created equal lows right above it. So I think that we're going to sweep that liquidity and then this liquidity here, at least down into 1.321. So that's my target on sells. So we got in on our position here, right? So counter trend. Well, actually, obviously, lower low, lower high, lower low, lower high, lower low. Obviously, we're looking for pullbacks to continue to short, but let's look at the pullback counter trend. High, low, high, low, high, low. Little doji candle there. So buying volume failed to make a higher high, lower low. So that will turn into supply. And where is that supply located? 5,320, psychological level. Okay. That's exactly where we got that entry there. We got in on 5, went up to 35207. So we just got the fill there. Low spread brokerages are good to have with smart money because, if you're trading with the banks, you're going to be most likely seeing most of the time, not all the time, most of the time, probably very precise entries, wick entries. So what happened here? Well, we had the reaction. We failed to make a higher high. We made a lower low. So again, like I said before about kind of confirmation upon, reactions from objective levels or higher time frame levels, you can wait for, if I just scale into a lower time frame, kind of had like a mini distribution in a sense. We broke, we pulled back into that supply. That could have been an entry. But then really we made a lower low, we swept liquidity, and then we died again. So that this overall pullback or push failed to generate a higher high. We made a lower low. So this would be good for pullbacks to continue to short. And I'm actually going to look, see if we have any divergence, because that would be interesting to see. Divergence here. No, we don't. So, we don't always need divergence. It would just be an extra confluence. But that doesn't matter. It's not going to be absolutely crucial to a potential position. Okay. So where are our new levels? Well, again, we have 2 levels because we don't know if we're going to retrace that far. If we do, great. We can get in on a lower time frame. This is really our last buying volume in here that swept all this liquidity before making a lower low. So that would be our sort of that lower time frame entry. But then just a regular higher time frame entry could just be really where this 1 hour 50 EMA rests, just where the overall pullback started right there before the lower low. We pull back, lower high, lower low, something like that. That's what we could see. Because at that point, for that first pullback, even if we started to pull back right now, that would still be in premium price. Who knows if we're going to make it all the way back up into here? But that's why we have 2 levels. You can go half risk each on those positions. Looking to continue to make lower lows, take out sell side liquidity, come into our overall objective at 1.321. So those two levels are what I'm looking for. USD Swiss franc. So it's interesting here. We had our first initial level here that we called out on, I think, 2 Wednesdays ago, that live session. I think I talked about it then. So yeah, it was because Wednesday the 11th, yeah, that was where we had our live session and we were trading in here. That was 8 o'clock, right? We were trading right in here. We were waiting for the pullback up into that supply zone. We finally got that and we rolled over, made the lower low. So obviously we're overall bearish. Want to continue to look for sells. We can see in here that we pulled back, high, low, high, low, high, low, swept liquidity, this previous high, had the reaction, the failure to make the higher high with that green candle, and then the lower low, and we took out that previous swing and that swing point. So now we know that we should be looking to pull back to continue short with the overall trend. So we got that position there. So now let's look for, let's see, we have that lower low, we have the lower high. Oh, we've made a lower low now. We finally made it. So now what? We could be in for a potential pullback to then short off again. I'm not sure if we're going to get a deep pullback. Who knows? But we have made a lower low from this previous swing point. So what do we naturally expect? Lower low, lower high. So that's what we would like to see. Now, I'm not saying we're going to get this. We could easily just roll over, right? And then maybe have a overall pullback later. Who knows? But when you have a lower low, you normally would have a lower high. It's just what trending is. So because we took care of that previous low, we could be in for more of a counter trend push before then continuing. This would still be a lower low, lower high, lower low. So let's zoom in here. Let's go down to the 15-minute time frame. So we're kind of conflicted because we're still maintaining bearish structure. Let's look at the structure here. Low, high, low, high, low, high, low, high. We have actually come into this level, this previous swing point, that supply level. We filled all that imbalance, a huge imbalance there, just straight selling volume. So we are currently reacting from it. However, since we've made a lower low, we could be in for a lower high, maybe a short term, Monday, Tuesday swing to the upside, maybe a little bit of dollar strength, and then we get dollar weakness for the rest of the week for our higher time frame push. But look what we kind of formed. Equal lows on Wednesday and Thursday. Thursday, London session, 3 in the morning EST. That's prime London session open. That is London session open. So we had the manipulation lower, the breakout of the, sort of the Asian range here. And then we pushed higher, creating that higher high. So now we have made a high. We have failed to make a lower low and made another higher high. Yes, we've come into our previous swing point, but I wouldn't say that we couldn't go long here. I said we could potentially. I would definitely use half risk if I'm going to trade this for sure, because we still are overall bearish. But I wouldn't be surprised if we reacted from that level, because this is also sort of like that retail head and shoulders, shoulder, head, shoulder, sell, enticing sellers, buy up. So this could be, that demand or sponsored move followed by the huge imbalance that was created. We could sweep all of this liquidity, 1, 2, 3 touches, sell to buy for another higher high, for maybe like a 1 drive, 2 drive, 3 drive, A into B into C, and sort of short off. That was bad. 1, 2, 3, A into B into C. We could see that. So that 3rd drive, we could catch sweeping sell side liquidity to mitigate this demand, fill some imbalance, maybe have 1 more drive up, maybe create the high of the week or something before rolling over. I have no idea, but that looks like a very good potential position there, because the confluences and the concepts are there. Yes, it's technically a counter trend trade. So I would, if you're interested in that position, definitely reduce your risk there. NZD Swiss franc. I'm going to go over this quite quickly. I don't really have much on this. So with NZD Swiss franc, it's really tricky because, I'm not going to go over all the confluences here. There was equal highs right here. Equal highs. We ran the equal highs. We made a low, we made a high, we made a low. We pulled back and we started to make another lower low. Yes, we still are bullish for sure. We could easily make a higher high, but we are still higher time frame bearish. That will load for me. And this is the previous supply zone. So that lower low, reaccumulation or distribution, lower low, we could be in for a lower high for another lower low. So that's what I thought could happen. So we were originally trading this long, right? We were originally buying with this expansion, but then, or excuse me, this expansion here. We had buys from this level here, and then we had a buy from here. We had the equal lows, sell to buy, reprice, continue, higher high. We wanted to pull back, had the reaction, but then came back down and swept our stop loss. So we did lose that position. We did lose that trade. Then I thought, okay, well, we made a lower low. Well, we could be pulling back into these levels of supply that failed to make higher highs, and then short off. We had the reaction again. We started to push back to the upside, and I said, I'm closing these positions in slight loss. I don't want to be involved in this market right now, especially since it was Friday, market was closing soon, and we were not getting the proper reactions from those levels of supply. At the same time, we were still overall bullish. And the fact that, we created a higher high, higher low, higher high, higher low. And in the process of creating that higher low, we have created a major accumulation schematic and now started to expand. This could have just been, probably is, just an overall pullback, sweeping liquidity, coming into the pretty much the last selling volume of the accumulation before the expansion. So testing that and then rising again. So that could be like a overall pullback, sell to buy, higher high. Then we can be looking for longs. So I actually am looking for longs here. We also have 1, 2, 3 touches of this trend line, meaning there's liquidity resting above it. So most likely price will at least, run that liquidity, make a higher high. So that would signify to me that we're probably going to continue long here. Okay, so where could we potentially be looking to place our trades? So in here, this is a nice level of demand. It is, but it's not in discounted price. Now you can take it off of half risk, maybe enter their stop loss right here where our second entry could be, but this is the discounted level of price there. This is where we came into that last selling volume before we started the expansion, right? So we swept liquidity into that level, mitigated, pushed strongly up, failed to make a lower low, and made that higher high. So this would turn into that demand right here. So if we get a pullback back down into that level, we'll be looking for buys. But short term, this could be a level in which we just kind of come into and then just continue. We may not have a deep retracement. So that's just a potential. So looking for overall longs on NZD Swiss franc. UJ, really don't have much on UJ. I think that will definitely be coming into this previous low here, because in a downtrend, especially the dollar is extremely weak, we attack sell side liquidity. So where is sell side liquidity? Well, there's sell side right there, there's sell side right here, there's sell side right here, and there's sell side right here. So I think we're going to attack that low at least. So pullbacks to short would be appropriate. We are looking for dollar weakness. So where could we be looking to pull back into? Well, I have 2 levels here. I have this level of supply right there that was never mitigated, right? We can see with this push, we had a lower low. Whoops, I know what that is. We had a lower low, a lower high. Not really a lower low, kind of equal lows, had a little bit of a reaction. Lower low, lower high. We swept these highs in here, coming into our last buying volume there. In the process, we created a high, low, failed to make a higher high, lower low. So that's a lower low here, a lower high, lower low. That's our supply that was never mitigated. So that is our higher time frame level that we could have a sweep of liquidity here run into before falling again. That's definitely a possibility. However, if we are just to maintain the lower time frame structure, we can see here that we pretty much pulled back into our previous swing point. Lower, lower high, lower low. We retested that level, swept this previous high just by a little bit. So that's a liquidity run. And then at that time, we broke structure back to the downside. How? High, low, high, low, high, low, high, low, high, low. Previous demand. Failed to make a higher high, lower low. So that turns into supply. We failed to come into that here, but what that is probably just generating liquidity for us to run the high, run the high, run the high. This is one expansion. This could be one pullback for another expansion, right? So that's why I think that we may easily run the high maybe to start the week, a little bit of dollar strength for overall dollar weakness. Because we have 1, 2, and almost 3 touches of this trend line. I would not be surprised if price came up right there, had a reaction from it, and then ran the liquidity, enticing sellers at that trend line there. So those are my 2 levels. So we have sell limits at 133.25, and then we have another one at 135.75. So mark off those levels, jot them down quickly, and you guys can follow along as the week goes on. So overall bearish, looking to take buy-side liquidity before continuing to short off. NZD CAD, I don't really have anything on NZD CAD that much. I mean, we're overall bullish, higher time frame. This was just an overall pullback, in my opinion. I think we're just going to head long now, especially since we broke the counter trend structure, low, high, low, high, low, high, failed to make a lower low, higher high. We've kind of broken that counter trend. So potentially, continuations just with the overall trend of the market. Canadian dollar is still weak, and we need to be looking for continuations long. We're above the 4-hour 50 EMA. We tapped into that. We are above the daily 50 EMA, 1-hour 50 EMA. We are above it as well. So really just in terms of structure, there's really no clear area of sponsorship. There's no clear area of demand. All I'm seeing is low, high, low, high, low, high, failed to make a lower low, higher low, higher high. So this would be the new range. Could see a pullback maybe into our prior, high, low kind of thing. Could see something like that. If we scale into the 1-hour time frame, we can see that, I think actually it's on the 90-minute. We can see that when we failed to make a lower low from here, we reacted off of supply, failed to generate a lower low. And the reason why we stopped there is because we actually mitigated this level of demand. So we made a low, a high, a low, a high. We failed to make a lower low, kind of higher high, pulled back, mitigation continues. So that's why, in my opinion, this is very much bullish. We swept sell side liquidity. I want to continue to look for buys. So who knows? We're coming into this level of supply here. Maybe we mitigate, we go short, we come into this prior swing point. So just maybe somewhere in here, who knows? Get the reaction, higher high. Maybe price comes into a supply zone in here, who knows? Has a reaction short, makes a higher high that turns into demand, and we can look to take it long from that level. Who knows? I don't know what's going to happen. It's not very pretty right now. I mean, the structure is pretty, but there's no current level of interest. And like I said before, there's not always going to be a level of interest. So we have to keep that in mind and just be patient and wait for the concepts that we know work to come into fruition. And if it does, great, we can take advantage of it. And if not, then we just move on. So I'm just going to be sitting on my hands for the time being, but overall, my bias is long on NZD CAD. Same thing with AUD CAD here. I have this level here, not to sell it from this level. I'm not selling from here. However, if we get a reaction and then a break of counter trend structure again, I would be looking to pull back to short it, because at that point we would fail to make a higher high. We would make a lower low. We could pull back for our third drive into the low to where we then look to buy it from our higher time frame sponsored candle. Higher high, overall pullback, higher low, higher high. So looking at the higher time frame structure, we can just zoom out and see, well, we have a high here that we have created equal highs with. And we also have another point right there that I think we could easily take out. Higher time frame, we have come into, just like NZD CAD and like AUD USD, we have come into a level of repricing. The 2020 crash, sell to buy, repriced, continuation, higher high. That's exactly what we did do. We came into that level, we accumulated lower time frame, and then we broke this counter trend. So I do think we can easily continue long here, very much so. So weekly time frame, the same thing occurred here. Remember what I just said: sell to buy, reprice, higher high, pullback, mitigation, continue. Same thing here. Sell, sweeping liquidity, 1, 2, 3, 4, 5 touches of this trend line. Sell to buy, reprice, continuation, higher high. Come back down into that repricing, sweeping equal lows, mitigation. Upon the mitigation, we create the same thing: sell to buy, reprice, continue. Mitigation, continue. So that it's so beautiful how fractal the markets are. So we're going to continue to trade with this current trend until it breaks, right? We're going to continue to trade with it. And if it breaks, whatever, then we have higher time frame levels to take advantage of. And I won't talk about that today for the sake of time. But if we do end up getting a break over the course of the next couple of live sessions, by the time this gets closer, I'll talk about why that's valid to look for continuations long. All right. So looking at taking out that high and this high, so this is going to be 159. So lower time frame, where is the current trend? Yes, we have a lot of sell side liquidity. We could easily take it, but as of right now, we're extremely bullish. High, low. So we start with the high, the low, the high, the low, high, low, high. So this could be a low for another higher high. Just continue with structure. So let's scale in here. So like we said before in prior live sessions, the 1 hour time frame, this is clear sponsored move, clear sponsored move. We have a higher high, a higher low. We've made a higher high, so we naturally want a higher low. We can see in here that we have a lot of things. We have structure, we have supply and demand flips, we have liquidity, we have time and price, we have mitigation of demand, we have breaks and counter trend structure, we have everything. Higher high, higher low, structure. Supply, coming into supply, failing to make a lower low, higher high, supply to demand flip. Institutional liquidity, right? Retail trend line, lower time frame, boom, 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 sell off, sell to buy. It's manipulation. What time did that candle form? 9 a.m. EST, January 6th, time and price. Why did we stop here? Come into a prior demand level. Break of counter trend structure with the previous swing point high. We have a lot of confluence for this level. However, could we be seeing a counter trend sell-off? I mean, we have kind of broken the counter trend, but remember, I always say, you know, just because we may have broken the counter trend by a little bit doesn't mean to just jump up out of your seat and look to place sell positions. This could easily just be a liquidity run, and then we just kind of continue on. That could easily happen. So what I would want to see is either we just come into here and I buy it, or we fail to make a higher high, we come into this supply zone or something, we stop and we fall again, making a lower low again. So now we have made a low, we have failed to make a higher high, we have made a lower high and a lower low. If we have more room to go to the downside here, then I can look to pull back to short it again. So then I would take my short position into that level in which I would then buy it from. What if we do this? Boom, 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 boom. Would I sell it here? No. Why? Because we come into objective. We only sell or buy into objective if, one, we have confluence to do so, but two, if there's room to go. In this case, if we come into it, there's no room to go. Well, why would we be wanting to short off? There's nothing that we would come into anymore. So we want to look for higher highs. So we wouldn't look to sell it there. But if we had room to go, if we stopped and pulled back, then there's more of an excuse to sell into that level, which would create profit for us if that worked out. So that's my overall bias on AUD CAD. Last one, AUD Swiss franc, very similar to NZD Swiss franc. Originally looking for buys, we had a level of imbalance. We also had a level of lower time frame demand. And here we had the reaction. We're just continuing to buy it. We actually bought it in here, and we made really, really good profit on this particular push. But then it just missed our secondary level because I had it right here, but it stopped right there. But anyways, we broke counter trend structure. The upside had the reaction. I thought that we could pull back into, there's a lower time frame repricing in here. We had the reaction, but we ended up falling to the downside. I had half risk on that position because we also had NZD CHF on half risk because they're correlated. So in all, we lost 2 trades. And it happens. Sometimes we do. Sometimes structure breaks or we have a liquidity run. But I only lost 1% total because half and half. So now I was looking for pullbacks into this area of supply, right? Because we have made a high, we made a low, we failed to make a higher high, lower low. So a pullback in short would be appropriate. However, we look at the higher time frames and see, okay, well, we swept lower time frame liquidity, sell to buy. We're starting with this uptrend. We've made a higher high in comparison to our swing point. So yeah, we could easily make a higher low for a higher high again. Into higher time frame objective at 6,620 or 6,840. Right? This could be classified as just one push for one pullback for one push potentially, or it can be classified as low, high, low, high, low, high, low. So that's why we have 1 and 2 levels here. So I think we could easily push up into 6,620, maybe even 6,840. So with that being said, what did we do? Well, let's look at the pullback. Where do we stop and make the higher high in comparison to our swing point? Well, let's look. Low, high, low, high, low, high, failed to make a lower low, higher high. We just kind of retested that previous swing point here. And now we strongly moved away from it. So at that point, we were in the trade. We were in a little bit of drawdown, but I said, okay, I'm closing out where I am. This is a 0.5% risk trade because we also had NZD Swiss franc. So I only lost 0.25% here. I just closed. I didn't like it. I wasn't confident in it. And I didn't want to, I just don't want to be involved. And we can also see, that high, low, break, retest, failed to make a lower low here, and the structure was broken back to the upside. So I do think we can continue long. However, if this ends up going short, oh well, it is what it is. We look to then short it again upon a break of structure, because at that point, this would be the failure to generate a higher high and then the lower low. And that at that point, we could definitely be looking for shorts 100%. But I'm out of this trade, but I'm also looking to take buy trades from this. Because remember, we came back into that previous swing point. We swept all this liquidity. And what else is this, guys? And I think I mentioned this before. This is a retail trend line. Look at that. 1, 2, 3, 4, 5 touches. How many people do you think are buying here? Probably a lot. We ended up buying here, not because of the trend line, but because of, everything else, like the supply and demand flips and, just continuing to buy with structure. But, this is a very, very pretty trend. Eventually, you're going to see, an overall pullback of some kind. That's why I say continue to trade with the trend until it breaks. We had an amazing trade here, right? We had a great, we would have had a great trade here if it came a few pips lower, but that would have been another great trade. We had another trade here. We just kept continuing to buy it, but then fine, it ended up breaking, and now we just reevaluate and see what's going on. But overall, you're going to make more money trading with the trend. You're going to have a loss at some point, but that loss is going to be totally negligible compared to all the wins that you're going to have. I'm net profit on AUD CHF, regardless of the loss that I incurred and this tiny little loss there. But now we just reevaluate. We see what's going on, what could potentially happen. We have to plan the trade before it happens, potentially. Obviously, adapting to what the market is showing us. Obviously, we don't want to have confirmation bias in the sense that we're only looking for what we're looking for. If the market shows us differently, we have to adapt to what the market's telling us. So do what the market shows you, not what you want to see all the time, right? So like NZD Swiss franc had the reaction from the level high, failed to make a lower low, higher high. Could have that reaction from that level of demand to continue higher. But we'll have to see here. We'll keep you guys updated throughout the week. If you guys are in VIP, we'll definitely keep a close eye on these pairs. All right, guys, that's all I have for you guys today. And of course, I always like to say, and this is something that you want to do full time. If you want to understand and have the deep meaning behind smart money and be able to take your trading to a whole new level, if you guys are already profitable, well, then maybe these live sessions could just help you with overall bias. It can help you with, furthering your education, and you won't need to join my group. But if you are interested in learning, the deeper meaning behind all this stuff and being able to, take the same trades we are and all that stuff, and you're not profitable and wanting to really learn the skill, well, then just book a free call with me. I would love to just speak with you about how we can best help you. If we can't, well, then at least you know that you won't have to spend your money on something that won't be helpful for you. But if you, really resonate with it and you think that we could definitely help you out, well, then we would love to have you on board. But that call is completely for free. It's with me or one of my co-founders. And it's going to be very easy. We're just going to chit chat. That's all we're going to do. It's going to be very brief, and then that's it. So if you're interested, head over to my website, arielfxtrading.com, and just book a free call. We'd love to speak with you. How long did it take you to become profitable? 18 months, about. And guys, I want to say this now. If you guys think 18 months is too long, you're probably in the wrong business. Trading, especially in Forex or stocks or anything in the investment world, it is quite frankly impossible to master trading or investing or anything without practicing for a significant period of time. I would say probably 1 to 2 years would give you a really good idea of how everything works. And I definitely think you can be 100% consistently profitable after that long time. Sometimes it takes a little bit less, sometimes a little bit more, just depending on, your everyday life. But please, please, please do not think this is a get rich quick thing. This does not take a month or two to learn and be professional at. It takes experience, because through experience, you gain intuition and you see the same things over and over, so please understand this is a long-term game. If that's just not something that you're able to do, this is not the right business for you. I'm very sorry to break it to you, but that's just the reality of learning a skill. It takes time and practice. So for me, it took me 18 months. I was failing for 18 months, and then I became profitable. It's just what it takes, guys. It takes time, it takes experience and practice, but it takes understanding the right content. So all this trend line retail baloney that some of you may be a part of, it doesn't mean anything. There's no justification for how the markets are actually moved based upon trend lines and retail patterns. I like to say this. You guys ever play blackjack? The card game blackjack? You ever gone to a casino and play blackjack? You ever wonder why you're allowed to take your little cheat sheet card and play with it while you're actually playing? You know, you ever heard the what basic strategy is for blackjack? Do you know why casinos want you to know basic strategy? Because the house still has the advantage, even if you understood basic strategy to a T, you would still have to have a disadvantage. Why? Because blackjack, if you understand the game, you have to act first. The house takes a higher probability because you have to take a card, right? If you ever played, if you guys don't know what I'm talking about, just tune it out. Those of you who have played blackjack, you have to act first on your hand. So the probability of you losing is already not, very high. It's not in your favor. They want you to know basic strategy because they still have an advantage over you. They're setting the trap for you, right? If you eliminate that by eliminating any potential of you essentially busting your position, right? You don't pull a card anything more than 10. If you guys know what I'm talking about, that takes that risk out, and now it goes on to the dealer to pull a card and potentially bust. So it kind of shifts that, the probability there. They want you to know basic strategy, just like the institutions and all this stuff. They want you to know what retail concepts are. They want you to know what head and shoulders are and wedge patterns and candlestick formations. They want you to know all this because it creates liquidity for them in their order book. So then just look for pools of liquidity so they can go run it. Because if everyone is doing one thing, they're going to attack that liquidity, and then you're going to get screwed over. So, just kind of take a step back and think outside the box and how stuff like this works. And that's stuff that we teach in a very systematic, very easy to understand level. We take you from really any level of experience and work with you individually. And we're providing our everyday setups and analysis and ongoing updates and trade ideas for you every single day within our VIP program. So if that's something that you want to take advantage of, I'll be happy to speak with you more further on that. All right, let's see. Any other questions? Love the hat. Yeah, I like these hats. They're cool. Cam does a good job creating them. They're comfortable. I would definitely consider or recommend you guys buy one if you guys want. But I mean, if anyone joins my group, I would consider buying one for you. Change of prime minister. Thanks, bro. It would be nice to hear more economic sentiment, as technicals are only so helpful, but very interesting. Yeah, I mean, I don't really pay too much attention to fundamental analysis. I pay attention to interest rates, monetary policy statements, ECB press conferences. I pay attention to that because you can see the long-term sentiment with that type of news event. But stuff like CPI or, I don't know, just GDP, anything that is relatively minor. I mean, non-farm payroll even. Job rates or consumer confidence, it's not going to make much of a difference because the news is used as the excuse to push price in the direction it was always meant to go anyways. So news isn't random. News isn't there to mess up the order book. The order book is the order book. The institutions have these order books. They know exactly where all the orders are placed. So regardless of the news event, the liquidity is still there. The volume is still, the pools of liquidity are still there. So it just is used as the excuse to move price in the direction it was always meant to go anyways. Either move in the correct direction or move it against the direction to mitigate an order or mitigate a block of orders or fill an imbalance or do what it was always meant to do anyways. But it's just done very quickly because it's used as the excuse to inject that volatility into the market. So that's why I really don't care about fundamentals, is because the price is going to do what price is going to do regardless. Right? If there was no news, price would still do the same thing. It just may take more time. And I mean, I've had 5 years of experience doing that. So, I mean, if you guys think that news is random, then I would highly recommend educating yourself a little more on that regard, especially when it comes down to the way price moves. That's just really why I don't really talk too much about economic sentiment. If it was helpful, guys, I would do it. Of course I would. I would definitely help you guys and provide you with that value there. I just personally, it doesn't affect my trading. It doesn't affect my profitability. It doesn't affect, my overall trade. So If I was a swing trader, yeah, maybe some sort of fundamental understanding could be helpful. But since we're not scalpers, but we're intraday, intra-week, we're getting in, getting out relatively quickly, just on overall zones, and it's not going to make much of a difference because what the technicals are telling me, that's what is going to happen. And then the fundamentals kind of just piggyback off of what is being shown in the charts. If you guys understand fundamentals, then more power to you. That's awesome. I love to see you guys are educating yourselves in that way. It's nice to know. It's good to have that education. All right. Any other questions for me before we head out for the weekend? I really do appreciate you guys' time today. Thank you guys for hopping on with me. Only going to have just a few more live sessions before we take a break. I'm not going to be doing this stuff every single week. Do want to be providing more value in different areas within our VIP program, areas within the Trading Nut channel. Probably going to be coming out with a few YouTube videos, maybe within the next couple of weeks, that I think will tremendously help you guys out a lot. We're trying to plan that as we go. So do take advantage of these live sessions, and reach out to me if you have any questions. We'll be happy to help you guys out in any way possible. But yeah, I mean, if you guys are interested in coming on board and really learning the proper skill and the right habits to take when trading and investing your real money, then we would definitely be willing to sit down with you and see how we can best help you. When is the new supply and demand course coming out? So it's not a supply and demand course per se. It has supply and demand in it. It's a smart money / supply and demand crash course. So it's going to be kind of tying everything together in a more systematic way of going about kind of looking at the wouldn't say the basics, more of like just opening a blank chart. How do we go from a blank chart to do top-down analysis, having the holistic understanding and stuff to look for as you go with the lower timeframes to help you with coming with to produce a bias and to potentially see a potential setup there. So it's going to be amazing. I'm so excited to release it. It should be let me just see. Yeah, Valentine's Day. What's that? February 14th. Yeah, February 14th. So here in the next 3 weeks. But that will be made available. That'll be a part of the all-inclusive mentorship program that we have. Obviously, prices will rise once that comes out for new members, obviously. For those existing clients who are already a part of our all-inclusive mentorship, then you guys are going to be getting that absolutely for free. We don't believe in upsells. People who upsell people are just looking for sales. That's not what we're about. We're here for education. So all of you guys are going to be getting that course for free. If you're not a part of my VIP community and wish to join and get the right education and the guidance from me personally, then we'd be more than happy to get you on board there. And then that course that comes out will be given to you for free at that time, and you'll be grandfathered in at this price. So let's see. Ariel Fx is the best. Thanks, Matt. Appreciate you. Don't wait, join the team and see for yourself. Yeah, I appreciate you guys. Testimonials are always helpful. We obviously like your honest opinions. So those of you who are in VIP, constructive criticism is always appreciated. But also the love and support is also very nice as well. Are you a millionaire? No, not yet. That's the goal for the end of this year. 6-figure trading account for sure. Funded accounts, definitely. But passively making $1 million a year, not quite. That's the overall goal, though, for sure. If that's what your goal is too. I mean, think about it. I don't have that kind of money yet, but at the end of the day, it's just applying the same concepts over and over and over again, building your accounts, getting funded, leveraging other people's capital. Like we have our own investment fund that we trade for you guys. So if that's something you're interested in, hit me up afterwards. I'll be more than happy to talk to you more about that. We do the trading on your behalf, and you take a large profit split from the profit that we make. Obviously, if we don't make money, if you don't make money, we don't make money, right? So we don't take management fees. We only take profit fees. So percentage on the profits. So, I mean, a lot of people do like that because, maybe someone isn't really profitable. They're still learning the concepts, but want to get your money working for you. Obviously, if you have money in the bank, besides your emergency fund, I would highly recommend getting that invested. Money sitting in the bank is just money losing. You're just losing money with rising inflation. So definitely recommend investing in something. Because if you can manage $100, you can manage $1,000. Then you can manage $10,000, $100,000, $1 million. It's the same thing. If you can apply the habits, the proper habits into your trading, you use really good risk management, then yes, making 5 to 10% a month on $100 is nothing. It's $5 to $10, but it's still the principle of it. You're still doing 5 to 10%. So what's 5 to 10% of $1 million? That's $50,000 to $100,000. It's the same percent return, just more monetary value. That's why so many people these days over leverage, is because you guys are thinking too much about how much money can I make and not about what percent return can I do. See, if someone comes to me and said, oh, I made $200, $300 on my $1,000 account in a day, I would never trust you with a penny of my money, because that kind of return, that kind of risk that you would have to be assuming with that kind of return is ridiculous. Hedge funds that manage billions of dollars probably do around 15, on a good year, 15, 20% a year. But everyone's looking to do that per month, which is why there's so many people who are losing. And that's why the masses lose. 95 to 99% of traders lose, is because they don't have the right habits. And so it's the psychology, it's the risk management, it's everything that doesn't have to do with technical analysis they can't seem to get right, even if they understand the technical analysis part. So everything ties together. Everything does. So it just comes with compounding. So yes, over time, compounding my wealth, yeah, we'll definitely hit that status without a doubt. And I would also recommend that you take the same approach. Take it slow. This is not a get rich quick thing. Don't have that instant gratification type of mindset. If you're able to understand that trading takes a while to learn and get experience from, and your money, growing it compoundedly, consistently, conservatively, doing it the right way will take time, but anyone can get rich. It is quite frankly a mathematical fact, but no one wants to do it the right way. You put your money in an index fund, if you keep putting in like $10 or $100, $200 a month for 30, 40 years, you're a millionaire, guaranteed. It's because over time, indexes like the S&P 500 always tends to go long because of population growth, technology advancements, innovation. It just naturally will always rise. So, that's just why investing for the long term is always the safest way. But obviously, you can trade. You don't have to invest, buy and hold for a long period of time. You can trade, get rich quicker like that, but it's still not going to be like let me learn this for a month or two, and if I don't get it, then it doesn't work. No, it does work. You got to put in the time and the patience and have the experience, but have the right education, but also have the right mentorship as well. So that's what we're here to offer you guys. So if you feel that you need additional help, we would love to talk to you about the areas in which you're struggling with so we can best help you. But if you don't, well, then you don't need to join. Maybe go for a prop firm challenge or something if you're already profitable. So yeah. Let's see, NZD JPY. Like I said before, I really don't like going over pairs that I don't already have highlighted, just because I can't really give you guys a lot of value because I just don't see much on it to talk about. However, if you are in a buy on NZD JPY, I think that's probably a good position. I think that XXX yen will rise. So, I don't know the particular setup that you have. I don't know your confluences or what you look for, but I would not be down on a buy on NJ. All right, guys, any last minute questions before I head out for my weekend? Hopefully you guys enjoyed this. You learned a lot. Be sure to tune in next Wednesday. I'm going to be holding another one Wednesday morning, 8 a.m. Eastern time. Make sure to follow TradingNet. He's an awesome guy. Follow his channel. Wyckoff accumulation. Yeah, that's good. It's probably a good buy. Perfect. All right, guys. Well, enjoy your weekend. It was great chatting with you all. Hopefully you guys learned some stuff. And we will talk to you all later. Last question here. How do you deal with drawdowns? I always have a stop loss. So drawdown doesn't matter. If it hits your stop, it hits your stop. If you don't have a stop loss, I'm not going to say what I want to say there. You need a stop loss. Do not not have a stop loss, please. It's really one of the dumbest things anyone could do. And I'm not saying you don't have one. I'm just saying you don't need to worry about drawdowns when you have stop losses and you're using proper risk management. Because sure, you may lose 1 or 2 trades in a row. Happens sometimes. But overall, if you have high risk to reward trades, if you're overall consistent, if you have a good win rate, well, then it won't matter because you're going to be overall profitable in the long term. So what do you think about flipping accounts? Do you think Ray Dalio and his $100 billion fund wants to flip his $100 billion to $200 billion? I mean, use common sense there. I'm not trying to be rude, but just kind of think outside the box and think, how sustainable is that? Fine, maybe you get lucky. Maybe you flip your $100 to $200 to $400 to $800 to $1,600 to $3,200. Eventually, that's going to run out and you're going to blow your account. It's guaranteed, 100% guaranteed. No one can consistently, sustainably, professionally flip accounts consistently for a long period of time. Not possible. I don't recommend doing it. Please don't do it. You need to see, this is why so many traders lose, is because that's their overall mindset. It's saying, let me flip my $500 account. If you flip your $500 to $1,000, it's a 100% return. 100% return. Why do hedge funds not? They're not looking for 100% returns. They have to do it sustainably. They have to be conservative with it. That's how you sustain your account. Because yeah, you can make a lot of money very quickly, but it's all just going to end up back in the market. Just like going to Vegas and gambling. You may get on a winning streak, but you're all just going to give it away back to the casino eventually. That's just how it works. Yeah, I mean, even if you're a short-term runner, flipping accounts is not a smart thing to do. It's just really not. If you have high risk to reward, no, I'm not saying you can't flip accounts like what you just said. If you have a 1 to 34 risk to reward, risking 0.5%, sure, you can make a really good return. You can do it conservatively too, because you risk 0.5%. But 1 to 34 risk to reward, how often do those come around? And even if they do come around often, how many times do you have to lose before hitting that huge home run? And most likely, you're going to lose a lot more than you win before hitting the home run. So psychologically, that's going to affect the trader. So that's why I don't really care for 1 to 30s or 1 to 40s, because with my own psychology, it doesn't really sit well. That's what everyone tries to do. They hit 1 to 100s. They see people online who say, oh, I hit a 1 to 50 or 1 to 100. Okay, well, what is it going to take in order to do that consistently? It's going to take probably 4, 5, 6, 7, 8, 9, 10 losing trades in a row before hitting that big one. Well, how psychologically prepared are you to lose that many trades in a row? Probably not very prepared at all. Even though if you hit that 1 to 30, 1 to 40, yes, you'll be making net profit overall in the long term. Sure, you can be, but psychologically, it's just not good for the new trader to go in on. It's just not a good angle to take. So yeah, I'm trying to be as nice as possible about it. Please don't try to flip accounts. It's just not professional. It's not sustainable. It's not what with rich, wealthy people do. That's what inexperienced, ignorant people do. It's just, sorry if that hurt your feelings. That's just what it is. I'm just straight up with people. How can one buy ESA? I'm sorry, I don't know what that is. You're talking about EAs, like expert advisors or like algorithms? I'm not sure if that's what you mean. We do have those available for people who want to make some passive income on the side. I have all of my accounts running on EAs myself. It's because of my trading plan, minimum 1 to 10. I mean, if that works for you, I mean, more power to you. Aiming for 10% a month. Well, that's not bad. I think that's realistic in manual trading. I think that's good. Now, let me ask you this question. What happens if you don't hit 10% a month? What happens if you're on your last day of the month and you're maybe only up 5%? Are you able to say, okay, that's good enough? Or are you going to try to hit that remaining 5% to hit 10%? It's all about how you kind of think about it as well. Education, savings account for kids. Sort of like those 529 plans. I'm not sure if that's what you mean. I don't really know. I'm not a financial advisor, so I really wouldn't know. I mean, it's if you have, I'm guessing you have kids, since you're asking that, I mean, yeah, saving for your kids' education is definitely super important. Yeah, Drago's good. I'm glad you have the right mindset there. All right. Anyways, guys, thank you guys so much. I appreciate your time today. I know we're going over, but have a great rest of your weekend, and let's keep killing it, guys. We're doing awesome. 17.8% in 2 weeks with the VIP. So yeah, absolutely killing it. Let's continue, and we'll see you guys all on next Wednesday for our next live session. Those of you in VIP, we'll talk to you soon. Thanks.